Yeah, I had to reboot this morning too, Dwayne, because my charts were off too. Yours right now is stuck at 30.18. It looks like the price is at 30.17. Okay. Okay.
Hey, good afternoon. Welcome back. Today is Wednesday, 31st day of July 2019. Sure feels like a Monday. Better check that calendar. So I got ambushed last night by yet another Microsoft Windows update. Boo, Microsoft. Apparently on the radio server, I had been postponing one for some time, and this turned out to be a major one. I got a pop-up that says your current version of Windows 10 can't be updated. You need to install a whole new version of Windows 10. And so, yeah, that's why you heard no pretty intro music today. But that's all right. We're just going to keep right on trucking. It's been, what a week. Here, first let me say welcome to the show. So glad to have you here. Whoever you are, wherever you are, we're just glad you're right here, right now. All right? Have a chart up, the S&P 500 Emini Futures, that is not displaying the proper price. My charts have not displayed proper pricing since the Sunday night Globex open. Off and on, I log in, I log out, I change time frames. Occasionally I get the right price, but, you know, it's been a challenge. Now, let me just turn some poo-poo into shinola. I think you know the real phrase. Our 1 year anniversary, and it has been a golden year. We have been so blessed in so many ways. Markets have been extremely kind, and our methodology, our strategy, our indicators, everything we do, the way that we do it, commonly referred to as the CFRN E-mini method, has shined day after day, week after week for a year. So on our 1 year anniversary, we get hit with probably more challenges from a market perspective and from a technical perspective than we've experienced the entire year. Now, some would say, ooh, it's a conspiracy, the universe is out to get me, all of those kinds of things, but I choose not to walk that path. I walked it a lot over the course of my life. I'm not going to walk it anymore. Here's how I'm going to see it. Every challenge that I could have had over the past year, everything that could have happened negatively over the past year, and didn't because of God's blessing, that's all I can blame it on. We're getting tested at this point at the 1 year anniversary. We had more trades get stopped out on the Monday session, which started Sunday night, than we had the entire week last week. But that's okay. Now, remember, it doesn't matter how many times you get knocked down as long as you keep getting back up. The fight is not lost. You're not beaten. The enemy has not won until you stop getting up. So, we're not only getting up, I'm saying giddy up. Now let's keep rolling. Now let's see just how close price might be to reality right here, right now. If you can't see the chart, go to our homepage, cfrn.net, right hand side, click the big microphone, follow the instructions. In about 30 seconds, you'll be registered And that'll give you one-click access to the show each and every day. If you're out of the office, can't get to your desktop, whoever you're hanging with doesn't want you to, don't be downloading that stuff on my computer. No worries. Grab a browser, Chrome, Firefox, even the Edge, and point it to youtube.com/CFRN/live. There you will find, during the show, a live, real-time simulcast of the show as it unfolds, take by take, brought to you by the good folks at YouTube. Thanks, YouTube. All right, let's shift this time frame. We might get an hourly chart, and we might not. You see? That's not clever at all. Okay. Go back to the 30. Now, see, now we get 30, but we're not displaying proper price. Okay. Let's just go with some oddball time. I rarely use a 4-hour chart, but apparently I'm not using one now. Let's see. Yeah, there's a mishmash of a daily. 10 minutes. What do you know? Maybe, maybe not. How about not? All right. We'll just let it sit there for a minute anyway, because Michael's going to come and do a recap of what happened in the live training room today. Let me just give you the numbers real quick from around the world. Those are correct. And we'll move on. And I'll quit griping and complaining. I got it off my chest. I won't bring it up again. Fair enough? Fair enough. Okay. Right here, right now, in the U.S. cash market, the Dow is up 22 points. NASDAQ is up 20. S&P 500 is up a little over 3. Russell 2000 is up 12. In the commodity basket, crude oil up 48 cents, trading 58.53 last. Now, that's almost a 1% gain. Gold, on the other hand, down just $1.60, trading 14.34 last. In the Asian markets, Nikkei at the close down 187 points, almost 1%. Shanghai down 19, half of 1%. And the Hang Seng dropped 368 points. That's 1.25%. In European markets at the close, FTSE was down 60 points. The DAX was positive by 42, and the CAC posted a gain of 8 points. That gives us a red day in Asia, a mixed day in the UK, and so far it's a big green radio Fed day here in the US of A. Speaking of Fed days, I haven't read a lot of the dribble out there this morning or watched any of the talking heads on TV. I did hear late yesterday that there are those who think the Fed might disappoint. The Fed might be concerned that history will not remember him fondly because he dropped interest rates just after the market put in an all-time historic high. So I did hear some of the talking heads yesterday trying to make an argument for why it's still a good idea, and others saying it's, in fact, not a good idea. To quote one source, I believe they said it was stupid. Now, I won't go out on that limb, but whatever's going to happen is going to happen at 2 o'clock Eastern. So we get the announcement at 2. We'll get a market reaction. Chances are the market will trade in both directions. Not at once, but you get my drift. Then at 2:30 Eastern, Chairman Powell will take the podium. He will field questions. Well, he's going to do a press conference, which for him, I assume that means he's going to field questions from the audience. Now, when he first became Fed chairman, he had a tendency to say some things that weren't so pleasing to the markets, to the president, to the man in the street. He has tempered his language. He's learning how to be the Fed, I think, in the same manner that we watched President Trump learn how to be a president. Now, some would say he's still got a ways to go. Fair enough. But put yourself in his shoes, even if they don't fit. Put yourself in his shoes and imagine what the life he leads now is like compared to the life he led just a few years ago. And that's not only him, it's his entire family. Wife and kids, and big change. I think he's done pretty doggone good. Now, he may be a little rough in his delivery. His bedside manner might not be the greatest, but apparently he's pretty doggone good at what he does. I'll give you an analogy. You're in the hospital. You're very sick. You got to have surgery. Now, there's 2 doctors available. One has a horrible bedside manner. He comes in, he doesn't even say how you doing. He just fires off questions. He's rough, he's gruff. He doesn't make you feel warm and fuzzy. However, the particular surgery you're about to undergo, he's got a 99.9% success rate with that surgery. Doctor number 2, nicest guy in the world. Man, he comes in, he's always got a smile, a quip, a quote, a firm handshake. You know, he talks to you, reads the Bible with you, even prays with you every time he comes in. It's magical. Unfortunately, he graduated last in his class at medical school, and he's been censored by the board a couple times because, bottom line, behind those operating room doors, he may still be a nice guy, but I don't want him cutting on me, right? So who are you going to choose? The one with the great bedside manner, the perfect delivery, always politically correct, or the guy that's going to bring you out of that room alive? I choose alive. Let's go to Michael, get a recap of what happened in the live training room today. I'll be back in a few minutes. That's easy for you to say. I'll be back in a few minutes. I promise I will leave my anger at the door. I'm just kidding. I'm not mad. I'm just aggravated. But I still love you all very much, and I'll be back in a few minutes. And we'll talk about whatever you want to talk about, answers to your questions. We'll look at alerts. We'll chat with John. That much. And I see questions. It looks like Valerie's already, or Michael's already hit them in the thing. But we'll talk about those, Donnie, when I come back. And that goes for all of you. Any questions you have about anything we do, from indicators to strategy to what color socks I wear when trading, put them in the chat box. We'll get them answered. Michael will, I will, whoever it's aimed at, we'll do our best to answer it. Michael, take it away.
Okay, I got it.
And we'll update all the weekly trading zones. I started to do that yesterday, but we'll get that done today.
Okay.
All right, Coach, it's all yours.
All right, here we go. Good afternoon, everyone. Today is Wednesday, the last day, the 31st one of July, 2019. Over here on the screen, what you are looking at is the homepage of CFRN.net. And if you have not taken a free trial with us and you want to take a free trial with us, go to the homepage at CFRN.net. Right over here in the right-hand column, it says 5-day free trial, apply.cfrn.net. You click on that and you'll be brought to this page. Now you can also go directly to this page. This is eminitrainingschool.com. But it'll bring you to this page. And on this page, all we ask for is your name, your email, your phone number. And you have the option of telling us your biggest trading challenge so we can tailor the one-on-one training to you. Okay. Now, the spreadsheet. Last day of the month. All right. So, let's see. It's Wednesday. So, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 31st day of July 2019. And today we made 15 ticks on crude and 10 ticks in gold. Put us at plus 250 on the morning session. And today it took 40 minutes and 5 trades to get the goal for the day. At that point, we're up $100 per contract. And we took a total of 8 trades. So we're going to end the month at plus $3,003. That's over 22 days, averaging 136 per day. And on the year now, we're at 17,551. That's over 135 days, averaging $130 per day. $130 per day. Okay. Now let's get into what's going on in here. Look, gold just tanked right here. It looks like there was a shorting opportunity right here, but it was probably going into the low of the day. On gold, we started out here with a stop out. Okay, and then we had a break even, and then a plus 12 to put us at plus 4 overall. When we stopped out, excuse me, when we stopped out here on gold, we were minus 8 ticks. This is when Chicago PMI was released. And that's what this big run-up was right here. Then we had a break even there. We had a short right there that we picked up 12 ticks on to put us at plus 4 in the morning. Then I missed that because I was filling out my log. Then on this one right here, we picked up 6 ticks to put us at plus 10. Yeah, that's correct. We picked up 6 ticks to put us at plus 10, and then we had a break even. Got really choppy here during the break. Really, really choppy. Well, this was actually leading into the break and during the break. And then it gave this huge leg down, and now it's just retracing it. Right now, all I can say is we have red on the YBR right here. Okay. And it's done about, I don't know, 38% retracement, looks like. Okay, on the euro, once again, on the euro, we had one trade opportunity right here that probably would have been a break even if I'd have done it, but I didn't. And then during the break, it looks like there was a shorting opportunity right here off the BBC. So that was it for the euro. Now, this level right here is the level on crude that I said price was going to get back to this morning. Now, we had crude inventories come out today, but we had the API numbers come out yesterday, and that's where price was when the API numbers came out. Our first trade was a break even right in here. Then the crude inventory numbers came out, and crude ran up to 58.82, and then it started coming back down. We picked up 5 ticks on this one. We missed that one, and we picked up 10 ticks on that one. Put us at plus 15 on crude. We missed that one. And then we get into the break. This important area right here, 58.37, price is going to hover around that and be attracted to it. Okay. During the break, it looks like if you ignored the weekly trading zones, there was a long opportunity right here and a short opportunity right here. Okay, that's what it looks like. It's consolidating right now, so who knows? The ES, once again, the ES just got stuck at a weekly trading zone. You know, it went sideways, then a leg down, then stuck at the zone, and then it started going up. Now, this was at the end of the session this morning. There was no trade here because it would have been a momentum trade going into dynamic resistance that had not been broken. Then it broke the dynamic resistance right there, and it gave another short opportunity. I mean, not short opportunity, long opportunity right there. Okay, and that was it. It doesn't have anything right now. Right at the moment, it does not have a thing. Okay, so I'll go back here to the spreadsheet. Again, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today we made 15 ticks in crude and 10 ticks in gold. Put us at plus 250 on the morning session. Today it took 40 minutes and 5 trades to get to the goal for the day. At that point, we're up $100 a contract. And we took a total of 8 trades. So on the month now, we're up $3,003. That's over 22 days, averaging $136 per day. On the year, we're at $17,551. That's over 135 days, averaging $130 per day. Okay. That is one contract. Again, that is one contract, 2 hours per day with a whole bunch of distractions. Now, if you have not taken the free trial with us, go to the home page at CFRN.net. In the right-hand column, it says 5-day free trial, apply.cfrn.net. If you click on that, you'll be brought to this page. This is eminitrainingschool.com. You can go directly to eminitrainingschool.com to take the trial. And all we ask for on this page is your name, your email, your phone number, and you can tell us your biggest trading challenge. Okay, so we can tailor one-on-one training to your challenges. Hit the send button, and you'll be sent all the information that you need to get into the live training room for 5 luxurious days. All right? All right. And with that, we can pass it back out to fabulous Phoenix, Arizona, overlooking South Mountain, Studio A, America's largest city park. Dwayne, if you are ready, you can take it back. And if not, I will just highlight once again that we had red on the YBR there. Red on the YBR there. Red on the YBR here. Donnie, these are all range bars. So if you know where the low of the bar is, you know where the high of the bar is going to be. And if you know where the high of the bar is, you know where the low of the bar is going to be. So if you're anticipating a shorting opportunity, if the trade is setting up and you're anticipating a shorting opportunity, what I say in the morning sessions, when I'm talking in the morning sessions, I'm rattling off numbers like on this bar right here. No, not that one. Sorry. I clicked on the wrong thing. I'm trying to move the arrow out of the way. There. On this bar right here, I would have been saying it's got a low of 40.4. It's going to have a high of 40.8. I know I say that fast, but what that means is you can put a buy stop on at 40 point. Well, it had a low, actually had a low of 40.3. So it's going to have a high of 40.7. So what you can do, Donnie, is be proactive and put a buy stop on at 40.8. Okay, so I would have said, okay, it's got a low of 40.3. It's going to have a high of 40.7. If we get a close at 40.7, that would be a long opportunity. So, I mean, I'm rattling all this stuff off as fast as I can to help you guys so you don't have to do the math. And so you can be proactive and just put your orders on. And so you just got to follow the trade setups. The trade setups are in the handout section right now. If you go to the handout section of GoToWebinar, these are the trade setups. Okay, these are the rules. Right. And if you want to do, if you want to do a one-on-one with me, let me know, and we'll set up a time, and I'd be happy to go over it, one-on-one with you. Okay. And the BBC is the green line right here. Concierge Trade Alerts, they come out at night. They're buy and sell levels for, I think, 8 different markets. Buy or sell levels for, I think, 8 different markets. And trail if possible. When you get into one of the trades, the Logic 24/7 trades, the TIP is trail if possible. All right, if you get into a Logic 24/7 trade or a Concierge Trade Alert or a daily double, you're going to have an initial target, a final target, and then it's going to say trail if possible. So if you hit your initial target, then you want to trail your stop. If you hit your final target, you want to trail your stop. And if it continues going in the direction of your trade, then you're going to want to trail your stop until price closes. Oh, Dwayne does it on a 30-minute chart, so I'll just show it to you on a 30-minute. Okay, you're gonna want to trail your stop.
Dwayne used to do it on a 30-minute chart.
Yeah, I know, Dwayne's charts are not working very well right now. You said you were going to leave that at the door.
I did. Said I laughed, right?
Yeah,
Yeah,
okay,
it's
you
funny.
laughed.
Yeah,
You laughed.
I'm happy.
Um,
No, keep going. You sound good. Checking
okay,
all the
so
boxes. That's good.
I'm trying. So right here, if price pulls back up, you would trail your stop right here. Okay, you trail your stop until price closes back up above the MA1. All right, that's what you would do. So right now, if you were short gold, like I don't know what the numbers were that Dwayne gave out, but if you were short gold from up here at 43.5, we'll say, just put in a new low at 34.5. So that's $700 a contract, I think. And you'll be trailing your stop right here in like 39. So that you'd be trailing your stop at plus $350, something like that. Okay, I think those are pretty accurate numbers.
Sounds right.
And that's how you do it. Okay, it depends on the product. The stuff that I do in the morning session is quick, fast, and most trades are over in a couple of minutes or less. And the evening stuff that goes out, those trades can last all day. All right, now let me tell you one more thing, since you're asking questions. The difference between day margin and nighttime margin is pretty huge, but you only switch to the nighttime margin if you hold your trade open past 4:15 in the afternoon. Now you can have a trade, you can put a trade on, at 7 o'clock at night, at 3 o'clock in the morning, 10 o'clock in the morning, at noon. It's all the same day trading margin. It's if you hold an open trade at 4:15 in the afternoon. Okay, that's when the margin changes from day trading margins to overnight margins. Okay. All right. And with that, we can pass it back out to fabulous Phoenix, Arizona, overlooking South Mountain, America's largest city park, in Studio A, where Dwayne currently is. Unless you have any more questions for me. If you do have more questions, I'm happy to sit and answer. 4:15, Tim. That's when they shut it down and do the accounting.
Hey, sorry, I was just on a call
Okay.
with Garrett. He's going to join us at the top of the hour.
Okay.
But
I was
real quick,
still going. But you
yeah,
can
you
grab
go
the
ahead.
charts.
Keep going. If you're still talking, please keep going.
No, I just finished all the questions. So
Okay. Then I shall say what I normally say at this time. I'm just sending Garrett an invite. Recap of the recap.
today it took 40 minutes and 5 trades to get to $100 per contract.
40 minutes, 5 trades. That's a good bingo. Now,
It is.
one thing, guys, you should understand is that Michael is working against a 2-hour shot clock, and we only use one contract in the live training room. And I know you explained that reasoning last week, maybe earlier this week, but for someone that's on a trial, as I send this email to Garrett, maybe you could explain that.
Okay. Years ago, when Dwayne and I first started this whole thing up in this method, I used to trade, 8 or 10 contracts, and people were trying to follow me. They were trying to follow me and trying to trade the same number of contracts. And, my account could handle 3 stop outs in a row with that number of contracts, but a lot of other people's could not. So, most people can handle 3 stop outs with 1 contract, but they probably can't handle 3 stop outs with 10 contracts. And so I just decided that I was just going to do 1 contract in the room in the morning. So if people want to follow me with 1 contract, do their best to follow me with 1 contract, then they could. But we have people, we have people trading 30 contracts, and so it's that's the reason. I have a large poster size free chart called Spygate. That's funny. But that's the reason why we do just 1 contract in the morning session. Okay.
Dokie. All right, very good. Thank you so much. Let's see so you've already covered all the questions that were in there.
Yes.
Okay. And then I see Wayne put in a comment, a short 3-minute video, what Mueller didn't tell us, from the Epoch Times, which looks like a good source of honest news. They even have a large poster size free chart at 2 minutes on video called Spygate. I'm going to check that out. Although I can't. Is there any way to grab a URL out of one of these comments, Michael? Seems like I would know that at this point.
Yeah. Here. Hold on. I'll do it.
I'd be interested in that too, because
if
I
you
can't
can grab
ever get
that,
one.
if you could grab that link, Mallory, and shoot it to me in Telegram. I can't seem to copy it out of.
Hang on.
What
you have to do is paste recent answer and find that.
Paste recent answer.
That's not doing it.
Yeah. I
know I was able to do this in the past.
All right. Well, I think Valerie's going to work on it, and she'll shoot it to me in the Telegram. Which, by the way, guys, if you are on the trial, you need Telegram, and a Telegram is just a wonderful thing. It's just one of those gifts that falls into your lap. You don't expect it. You don't really know where it came from. Although it says all good gifts come from God, so I'll go with that. It's free. It's fast. It offers Pentagon-grade security, which is a little better than Capital One, thank goodness. Are you caught up in that Capital One thing, Michael?
No, I don't have an account in Capital One.
I forget. This thing goes back like 14 years. If you've ever applied for a credit card in the last 14 years with Capital One, the bad guys got your goods. The good news is I think they got some enormous number. I don't know, is it 10 million, 100 million? I forget. But, I mean, one bad guy only needs so many. Unfortunately, he'll use what he can use, whoever got him, or they, whoever they are, and then they'll sell them on the dark web.
Yeah. No, I don't think I've ever applied for a Capital One card.
They used to have what was that commercial they had? I forget. They had one really. All right, let me get these charts. Let's get
okay.
Show in a row. So Garrett is going to join us at top of the hour. For those of you who don't know Garrett, if you haven't met Garrett yet, he is a private money manager. Been at it for a very, very, very long time. He has some unique insights. He uses some unique technical analysis that we don't necessarily use ourselves, because what we do is very simple. But interestingly enough, we usually arrive at the same conclusions. Now, we worked very, very hard to simplify our method. Okay, let me get the charts. Okay. And charts. All right.
Yes.
So now you can see the charts. These are last week's zones still. I was going to get them updated on the show yesterday. I did not. So, okay. Let me just do that first on the S&P. We'll just do each market as we go along. So, as you can see, last week's weekly trading zone here, okay, price came down to the zone, back to the zone. That's an 18-point move, and we talked already earlier in the week about all the journeys that price made over the course of last week, as these are last week's zones, traveling that 18 points up and down. All right, but we have new zones this week. Now, the new zones went to our partners and passport holders at 6:15 a.m. Eastern, Monday morning, as we've done since December 14th of 2009. Since we introduced the weekly trading zones to our family of traders, nothing has changed. Not a rule, not a strategy, not an understanding, because it's as close to the metal as you can get. So let me just move this one to 3011 and 3010. And up above, we got 19. Come on. We got 19. And there's 20. Okay. So this week's zones, we went from zone down to the zone, and that's an 8-point journey. 8 down, 8 up, 8 down, and we're just about 8 back up. So that's 1, 2, 3, 4 legs to this journey so far. 4 times 8 is 32. So that's what the market made available. It's based on zone to zone. 32 points just between these two zones. Now below that we have 2997/98. Now we do, for those of you on the trial, just so you know, we have an app that Michael created. When I send out the weekly zones every Monday morning, we have a little app. You go Insert, Indicators, CFWTZ. And when I send out the zones, it's a string of numbers for each market, which when you just look at the string of numbers looks pretty confusing. In fact, I'm going to show you what it looks like so you'll know. Let me go to my weekly trading zone channel in Telegram. Again, if you don't have Telegram, you should get Telegram. It's fast, it's secure, there's no advertising. They promise us there'll never be any advertising, which of course makes me wonder, how they even afford, how do they do this? Is it financed by the CIA? I don't know. That's my current working conspiracy theory, but I'm just kidding a little bit. So when you get this string of numbers here, you would highlight, Control C. My wife pokes fun at me because I go Control C, whereas she would go copy selected text. But hey, if two people agreed on everything, one of them would not be necessary. So now you take the string of numbers that you created and you come over here to past values. I think some of the versions say something different. Michael, is there?
Yeah, there's another version. You got the, I think that was the original version that you have right there. I mean, you can see where the prices were at the time that I created that. But the other one says weekly WTZ values, I think, is what the other one says. That's the one that I have on my computer.
Okay, so you grab, you copy that string of numbers, and then you got to clear out whatever's in the past value field already. Clear that out. Control V, paste that string of numbers. Then you have a little thing here called count, and as you can see, the count is 4 for the S&P. So I'm going to make this number 4. 4. I'm going to click OK, and bang. There go the zones. Now, why they didn't display properly, I can't speak to that. Did I copy the right set of numbers?
July 21st numbers is what you copied.
No, I copied the wrong numbers.
Yeah.
Oh, because in the channel, I don't see the string. Okay, so I just pasted last week's zones, but that's all right. I just want to show you how
I'll
it
get
works.
him. I'll get him there real quick.
Okay, no problem. So you can see what happens, guys. It just lays them all out, every one for that market for the week. Okay, and I can't encourage you enough to get them on your chart and leave them there for the week, for all the reasons that we're discussing right now. And what I'm going to do now is go insert indicators, WTZ. I'm going to go back to that past value field right here. I'm going to get everything out of there. I'm going to click OK.
They're ready.
Oh, are they ready? Where'd you put them? Oh, I see. Okay. All right. So I'll put the right zones on. Control C. Insert. Indicators. WTZ. All right. Past values. There we go. Count 4. And there you have this week's zones and last week's zones. Okay. All right. So that's how simple that is. Now let me just get rid of them all. I should be able to just go back and clear the field. Is that correct, Michael? Did you get them all?
I was talking this whole time. Sorry.
No,
Go to
apparently
View.
You can't do it that way.
Go up to the View menu.
View.
Not that one. The one up on top.
On top.
That one. All active indicators down at the bottom.
Big 10-4.
Okay. And you see all those WTZs? You can go and remove them all right there.
Got them. And they're all gone.
Last one.
Okay. Now the reason I moved mine manually, guys, is you just saw I took last week's and I just slid them into place for this week, because that just, from a workflow perspective, that just works better for me personally. So, but you have two options. Now, the way I've done it is I just took the horizontal line tool, okay, and wherever I drop it on a chart, it automatically says WTZ and the price that I dropped it at. And I can slide it into place. Now, if you want to use this method, drop a horizontal line on your chart, double click it, go to the properties box. As you can see down here under text option, I've chosen custom text and current value. You have several different options, okay? And for the custom text, I want it to say WTZ, and I want it to display far. I don't know how they came up with this, but if you go near puts it where did near put it? Try that again. Near. Far. Oh, I'm looking at the wrong one up here. Up here, far. Center of the screen. And near is all the way over to the left. Okay. And then, of course, if you're going to, now remember, if you do this, you're sacrificing the use of your horizontal line tool for other functions, because once you format one line, you're going to click Save as Default and then Close. Okay. Then every time you drop a horizontal line, it's going to be prepared to do the job of a weekly trading zone. Okay. So, the Globex Open for this week, July 28th at 1800 hours, which is not there. It is right there. Okay. Now the next zone overhead above 3020 is 3029 / 30. So I'm going to go upper. Now you can drag it into place, or you can just say, and there it is. Okay. So price out the Globex Open. Here's the Globex Open. We came down to the zone, attempted to get to that zone overhead, came a little bit short, a little shy. Swing high was 30.27 1/4. So we were 1 3/4 points off of touching the zone. Then we came back to the zone, and then we made another run at the zone where we effectively put in a little double top right here. Keep in mind these are 30-minute candles, okay? When you start to see, when things like this happen, this is the market dropping a little hint. If price can't get all the way to that zone, not once, but twice, doesn't mean the zone is wrong. In this case, it means we got a Fed announcement coming up this week in an hour, in about an hour. Is that right? Yeah.
Yeah. 2
So
o'clock.
often you'll get periods in the market where it lacks follow through. It starts to do the next high probability thing, exactly what your narrative that we teach you how to write your own narrative about the market each and every day, every market, every chart, every time frame. You're able to read it like a newspaper when we're done with you. Okay? So we didn't have the follow through here we would normally expect or here. Is that going to carry forward into the rest of the week? Yeah, let's take a look at the results. Okay? A move gets underway and it doesn't quite get there. Now, why is that? Because of the Fed announcement, there's a lot of caution among traders. It doesn't mean they're not trading. They're buying, they're selling, doing what traders do. But they're doing it with a degree of caution. And across the board, there's a lot of what we call indecision. Is the Fed going to raise? Yeah. We're all convinced of that. Are we going to get a 1/4 point or 1/2 point? Well, consensus seems to be a 1/2 point. There are those out there saying the Fed is going to surprise us today, shock us today, if you will. Now, remember back, how long has it been since how long has it been since the Fed surprised us with their actions? Used to happen all the time. I'll never forget the time that Ben Bernanke, pretty sure it was Ben, in the middle of a trading session, with no warning whatsoever, just a press release hit, boom, Fed lowers interest rates. And the markets went absolutely wild. All right, so that lays the groundwork for why things haven't flown exactly the way we anticipate them to flow. The good news is you can go back in that alert trial channel and you can look at previous trials and you can see what it looks like under more normal conditions. But hey, I love a good challenge, and the fact that we're getting this challenge on our 1-week anniversary, I embrace that. I think it's a good thing. I wish my charts were properly charting. Let's see where price is right now in the S&P. Can we get an hourly? We can't get an hourly.
On the 4-tick range is at 30.15.5 right now.
That's
30.15 1/4.
You're at what?
30.15, no, 30.15.75.
30.57. Did we ever make it on this candle that was trying to print? Did we ever make it there?
To the zone? Nope. It got up
How shy
to,
did we come?
1/2 point.
Okay. All right, I'm not going to close my platform, but what I have found is sometimes if I just log off real quick and then just log right back on, leaving the platform open, log on. Sometimes it'll spur it to life for a few clicks. See if it jumps.
Yeah, mine took forever to connect this morning. I had to redo mine too. And
Oh, I didn't know that Daniel's Trading offered the multi-charts platform on their website. Did you know that?
I did not know that.
Now, apparently, multi-charts is something that you buy kind of like Ninja Trader. Any idea what it costs?
Yeah. I don't know what it costs. I'm not sure how their business model works.
Now,
I know
they
that
gave me
we
a
have our stuff
30-day.
on.
I'm sorry. Go ahead.
I was going to say we have our stuff on multicharts.net, not
Okay.
multicharts desktop. There's a difference.
So now .net, is that a web-based platform?
It is.
Okay. So the one I was grabbing was the kind you actually download, and it says you get a 30-day free trial. Then you can buy it if you want to. You never said what it cost. But where I got hung up was trying to turn on the OEC data feed. I'll get that figured out today. I'm going to play around with it, see what it's like. I didn't know that it'll run ELDs, and you know what that is. So,
Yes.
all right. So I'll do a lot of exploring there. All right, guys. It looks like I did get some movement.
No, you got to the current price anyway.
Did I? Okay. So so went from
It's not
zone
It's not moving around
to
anymore.
zone. Now here's another example right here, guys. See, we get to this zone, and we come. I'm not. Hang on.
John's
I'm
up
looking
there.
for 97, 98. Huh?
I said John just popped in.
Did he? Okay. All right, guys. We're going to talk to John, and then top of the hour, Garrett's going to come on, and then I'm going to continue to set up the weekly trading zones for this week, because I want you to be able to see them, jot them down, make sure you know how to put them on your charts for the remainder of the week, remainder of your trial. If you've missed the first few days of the trial, get busy, because I think the Fed's going to bring, whatever he does, if he raises them, doesn't raise them, raises them 2 points or a quarter point, whatever it is, I think off the back of that, we'll have some good volatility and some really good trading for the remainder of the week. So if you're not on the trial, get busy. Go to eminitrainingschool.com, sign up, and Valerie will rush you out all the information you need. She'll get you set up in Telegram. If you're not familiar with Telegram, don't be intimidated by it. It's so simple and easy to use. You'll wonder how you lived without it. Man, you can use that thing to text people in Beijing, call people in Paris. It's an amazing thing. When Agnes is out at the orphanage, which is well outside the city of Kampala, if I need to call her, I can just call her without making a long-distance phone call. And that's just pretty cool. John, welcome to the show. So I've got all that and more for you when I come back. You there, John?
Stocks are starting to come back here. I think this is actually a good
I
sign.
hear him. All right, he's lurking in the background. So I'll keep talking. All right. So we failed to get to this zone by Askoshi Deskane. It's Japanese for just a little bit. And down here, those should get your spidey senses sensing, because the follow through we typically see and expect, it's not here. That's okay. It's understandable. We have a valid reason for it, and that being this Fed announcement. But once this thing's behind us, now, I don't encourage you to gamble on what the Fed's going to do at 2 p.m. Eastern today. Now, I know that some people trade news for a living, and they're very good at it. I'm not. Okay? I'm quick to admit what I don't know and what I don't know how to do. Okay? I tried trading the news, the announcements, back in the early days of trading Emini Futures, and my results were mixed. Sometimes I would hit it and sometimes I wouldn't. However, there wasn't a high probability is the potential for one thing to happen over another. That's what it really boils down to. And I could never really do better than 50%, 50-50, trading economic reports. And so for me, that's gambling. If I don't have a definable edge, I don't have a trade. I don't have an opportunity. I might have a temptation in front of me, and it takes time to learn to resist the temptations. Because when you become a trader and you get that money in your account and you got that mouse in your hand, everything suddenly looks like an opportunity. When you're a hammer, everything looks like a nail. You gotta learn to, now you've got a SEM account. Every trading account that I'm aware of, no matter who your broker is, comes with a simulator. Okay, if you gotta get that itch out of your system, do it in SEM. You can click that mouse all day long. Nobody's watching, nobody's judging you. There are going to be no marks made in your permanent file. Go there, practice. You know, if you make silly mistakes, that's okay. It's a learning process, and it doesn't cost you any money. When you go live, it is so important that you learn to spot what is a setup. And not all setups are high probability setups. That's what we teach you. We teach you to spot setups that are high probability in nature, because a definable edge is the difference between a definable edge and discipline is what separates profitable traders from non-profitable. That you, John?
Yeah, hi.
Welcome
Sorry.
to the show.
Thanks.
Garrett's going to join us here in just a bit, but yeah, go right ahead.
Garrett?
Yeah, he's going to join us here in a little bit.
Oh, great. Okay. Listen, there's quite a lot of stuff going on today. We just had a sort of a sharp pullback in the metals. Not too much in the gold. I mean, we were up 10 yesterday. We're down 4.5 today. It's not that big of a deal yet. And the palladium is higher. So they were down yesterday. They're recovering today. So I would consider that to be somewhat constructive. The nugget got knocked down. It was a great buy about an hour ago, half an hour ago, about 31.5. It's now 32 and a bit.
I'll bring that chart up here in just a second.
Yeah, I have a feeling that there might be a stronger rally going into the 2 o'clock hour. Only got an hour left over the next hour, and if we go back to the highs of the day, especially in the stocks, it would be incredibly bullish. So, by the way, remember we looked at the British pound when it was about 125, and it had that two little feet sticking up. And
yeah,
so
we talked about that at length. We sure did.
Yeah, it came down. It came down to the 121, I think, or maybe even 120 and a bit. It's reversed upwards. The pound is probably getting pretty close to a bottom here. Worst case scenario is it could spike down to maybe 117, 118, take the previous low out by a smidgen, make a big double bottom, and then potentially go up from there. Or it possibly could have already bottomed. I mean, when you look at this, I mean,
this
the
is
euro
a
thing.
daily of the JNUG. That's the one you wanted, right, JNUG?
Yeah. I mean, look, it's kind of just a completion of. It's a sea wave. It looks like a little sea wave there, sort of flag formation now, and this thing could be cleared for takeoff. And I would say the next stop is 100 to 110, 20. By the way, I should have jumped on this yesterday. I meant to. I kind of had a note and mention it. But the drug sector, the pharmaceutical sector turned around. It was, it got beaten down. We talked about it a couple of days ago when it was near the lows. And it turned up pretty sharply yesterday and again today. And Intercept has actually had that earmarked.
Is it LABU, John? Pharmaceutical?
Yeah, LABU, correct, yeah.
Okay, there's daily on the...
Yeah, I mean, look, it's starting to look pretty bullish, this thing, right now, the LABU.
Yeah, if we can get above 53, 54, man, that's just clear skies all the way up to about
it could absolutely go
$10
crazy.
move. Potential $10 move.
So I really think, look, the Intercept is a very volatile stock, but could be very rewarding. The three or four now, GILD, AGIO, MDGL, and Intercept ICPT all have kind of been making very, very good bottoming formations here in the last couple of days. Gilead could be poised for some big upside from here with this kind of reversal going on today. Have a look at MDGL.
Okay.
see how it's sort of turning there. It could be the beginning of a big up move. Remember, this thing came remember the last time it was down here, went to 100 to 300 in about like 2 days. So, you got to keep your eye on these stocks because they're a big demand situation with the fatty liver issue, obesity problem in the U.S. and worldwide. In fact, if you can squeeze it up there, you will see the dramatic up move in this stock before it's come back to even,
gap there.
right.
Wow.
Literally.
So this thing ran in the course of a day, ran from $100 to, over a couple days, it ran from 100 to 300.
Exactly. Yeah. So we might be in for something like that again. And if you look at Intercept now as well, I mean, the problem with these companies is that when they're doing these studies, they have a lot of costs and things. But look at Intercept. We could be looking at a possible bottom there right now. It's one of the hottest things in this world. It's kind of remember when we made that big dramatic double top, and then you see how we sort of stabilize. No, the second one, the secondary top with the high volume. See that? Just to the right of your cursor there.
Oh, here?
See how that thing got absolutely smashed, and then it went all the way back up to it was a hell of a trade. That if you got in at 95, it was a fantastic trade. So even after a dire, but then when it went,
because you got to take into consideration, folks, that this stock closed, or this closed here on this day, and it opened way up there.
Yeah, exactly. So these little see how these little turns with this stock. You see these baby turns turn into big deals.
Mm-hmm.
So and some real big players in this stock. People like Stephen Cohen. He's a big fan of this issue, and when that guy starts buying, the world, he can move mountains. So the other one is AGIO. I think this is a very constructive looking stock right now.
AGIO. Okay.
See how it's starting to turn up here.
Mm-hmm.
And look, this is a pretty high quality stock. This is a cancer issue, and you can imagine if this thing starts going up into the
55
60s,
to 65. I love this.
Yeah, it could really, really go. Have a look at FedEx. Let's see the FDX, because this is kind of a leader as well. Yeah, it sort of looks like it's ready to start going higher, this stock. And it's kind of like an island situation. If it was to gap up, just like we were talking about the gold there yesterday, it'd be very, very bullish. Did you see the email I sent to you?
No, John, I haven't looked, but I will check right now.
Great.
Come on. Okay, chart for today's session, is that the one?
That's the one, yeah. Okay. If you can start at the top, we'll start at the top and work our way down.
Okay, you want me to just bring up the whole email, right? Is that correct?
Yeah, if you could, that'd be great. Sure. Yeah, thanks. Okay, last time we saw this setup rallied for months and years. Okay, so if you could just scroll down a bit now.
Okay.
Scroll down. Okay, you need to go to the right a bit. You need to kind of.
I'm trying to blow this thing up. Okay.
Yeah. Okay. There you go. No, we got to go to. You've got to sort of cursor to the right. I think. There you go. Okay. Now, if you could scroll up so that the whole chart is in the picture. I'll scroll down.
You know what? Let me try this. Let me see if I can copy this image. Or save image as. And I'll just stick it on my desktop. Okay, maybe this will be better.
Okay, great.
There we
Now,
go.
what I want to point out about this chart is, we've been talking, we've looked at the gold chart, with these, each consolidation is getting larger, right? Like you had the consolidation at the bottom there in 2001, and look at the move up, and then you had a bigger kind of a double consolidation, what I call a double 1-2. And now we have a 6-year consolidation that, if that green arrow goes to the right, upwards, is potentially going to be a kind of an island, a 6-year island bottom, which is something that I don't think anybody's ever seen in their lives. And you can see how this thing could definitely go back and test the highs of 1900. And the next chart, but here's the thing. The length of this consolidation, this 6-year consolidation, portends, monumental upside. Certainly 4 years to the upside, and possibly much more than that. So, and if you look at the way the world is going, I mean, listen, these conservative senators come on and say things like, they don't like the spending bill, and they don't like this deal to, raise the budget and all that. It's never going to change. Listen, if they really wanted to solve the budget deficit, most of it, Arthur Laffer was just on a show a short while ago. 19% of the U.S. economy is healthcare. 19%. And you know how much of the budget deficit is healthcare? It's like more than half of it probably. So if you, if you
Garrett,
really
I opened up
to,
your mic. John, just wanted to know Garrett's here. I got somebody at my door. You guys keep going. I'll be right back.
Hi,
hello,
John.
Garrett. Hi, how are you?
Good, as far as I know.
Have you? Can you see the chart we've just been talking about a minute ago?
Yes.
Yeah. Do you see the potential of this thing here? Like imagine we get up into that upper cup and handle type situation there. I think you could be looking at multiple thousands of dollars to the upside, kind of right on my timeline, which is 22 to 23. In fact, there's a chart that I forgot to put into this to send to Dwayne, which is the number of Deutschmarks. I think in 1918 it took 170 Deutschmarks or something to buy an ounce of gold, something like that. Then a year later it was like 490. A year after that it was 1,300, and eventually went to millions of Deutschmark to buy an ounce of gold. And it looks as if that's, my theory is that, while the Weimar Republic was the canary in the coal mine back in the early 20s, in this era it's going to be the Western currencies, because of all the debt in the world. And right now this Fed is about to embark on an easing cycle, and the problem is we're not. This is probably very bullish for gold. The first thing is, right now it's costing us, before we earn a single dime, I think we have to pay 350 billion just in interest, right? So that doubles to 750 billion in a few years' time. So that's going to be a very bad thing. Secondly, it's going to reduce the bang for our buck that you get out of borrowing, to boost the economy. That's diminishing. So that's the most dramatic development. I think China's having the same problem. Having grown for 30 years, they're pushing everything they can to get the Chinese economy going, and it's not registering. It's not happening. The economy's contracting.
Yeah, China is obviously the trade leader, like we were in the 1920s, about to usurp that from Great Britain, and they'll, of course, usurp that role from us.
Yeah.
But the ones that should have the serious depression, and now with everybody in the world set up like this, is that we should all play into that. But the ones that should have the most serious depression is China.
No, you're dead right. Because it's sort of, fantasy land over there right now with the ghost cities. And I mean, they just run out of, that's the, the ghost cities just keep people working. The biggest problem with China is you get 300 or 400 million people unemployed. You really got a problem, especially when they've tasted prosperity. And, they go from prosperity into misery, not necessarily misery, amongst the elites and and the higher echelons of the population, because there's a lot of billionaires over there. But it is very symptomatic of Japan. Remember, we grew 4 decades from 1950 to 1989. It was just an upward streak in Japan. 4 decades of growth. The market went from 50 to 39,000 or 40.
Right, I remember. Yeah,
it was, 40.
Almost 40 on December 31st of, what was it, 89, huh?
Right. So it went from 40 and 51 to 40,000, effectively. So,
yeah, and they had what, a square, 1 square block in Tokyo that was worth more than California.
something like that.
Something like that. I mean, just
Yeah,
ridiculous.
it's kind of typical. Another example of that was when Yahoo. In fact, this is a very interesting sort of historical note. When Yahoo was at an all-time highs in 2000, it was valued more than Spain, Italy, and Norway combined, I think.
Yeah, I remember. And look at it now.
Yeah.
Probably still is. No, I'm just kidding.
Well, the thing about it was the only way, and I tried to do something about this back then, and I wrote a piece about it. The only way Yahoo could have locked in their gains forever, would have been to buy gold. In other words, if they could have bought the entire gold industry, they could have bought pretty much every company and locked up the entire gold industry with their market cap at that time, and that was the only thing that would have kept their value. If you think about
right around that, after the top there, they could have come in around $250.
Right. And you know what? We could be looking at a deja vu type situation here in the next few years, because the thing is, not only would have that been the greatest switch of all time. Remember, that was when gold was at 250, right before it went up 7-fold. So, and the crazier things have happened, but throughout the first decade of the millennium, the bankers were selling gold all the way up. They were switching. They were getting out of an increasing asset into dollars. How crazy? How stupid could you get?
Yeah, they did that. By the way, they did that run from 250 to 877 in just a couple of months. I was playing that one day, literally day and night. But back then, information. We didn't have the speed of information. So being in California, I was in Southern California, I was in Malibu at that time, but what I was able to do, see if I can remember this.
By the way, I want you to know, Garrett, that we don't hold that against you. The fact that
being in
California,
Boulder, being in Malibu, or being in California.
No, we love you just the same.
My family, has been in the state since before it was a state, and for the majority of that time, that's not any big deal if you're from the East Coast, but the majority of that time, California was very conservative and so forth. And then when people started to view California as an e-ticket ride at Disneyland, it's like, I had a guy I knew came out, very conservative guy from Ohio, comes out to California and loses his mind. He's drops out of the industry, becomes an actor, and
apparently that was contagious. Yeah.
Oh, it's just and so I thought, don't blame it on the original Californians. Blame it on all the all the nice people that came here. Let me put it that way. I've got a couple of things on gold from a guy who was.
You want the chart?
No, I'm looking right at it. I got my. You mean flicking over?
Yeah. Do you want me to display?
Sure. Yeah. Okay. Why not?
Let me fix that
I
up
was.
for you. All right, you got the charts. Now, John, in that
Yeah.
email, was there a third chart, or was it just those two?
While Garrett's doing it, let's listen to Garrett first, and
Okay.
then maybe we can go to it later.
We'll go
if
back
you
to it.
like.
All right.
I'm concerned on gold.
I see your desktop,
this-
but not a chart yet.
Oh, you know what? I just need to move everything over on that side.
There you go.
There you
now
go.
we
About
got it.
now.
Perfect.
Okay, and what I'm going to do is move your little deal over on the other side.
Yeah, you can
that's
drag
great.
that to a completely different
At least
monitor.
I thought I was going to do that. Apparently not. Anyway, there's the same chart as John had. The measured move here on the head and shoulders comes up to right about where we were in here, and all this stuff on gold is there. I'm not sure that we're not going to get one more push back down, maybe to where this last thing broke out from. In fact, I think we will, and my guess would be it's toward the end of next month. But
Now,
you know,
what price are you referring to?
Good question. I don't know, maybe $100 lower.
Okay.
And it may not happen, but the bottom line, I mean, the seasonality forever in gold has been buy in August and sell at tax time, and that's just a generalization, but it's a generalization that's worked pretty well. I think if we get I'd like to see the market correct, but we're setting up for something really big. And I'm just, I've heard the gold story, 1,000 times that, we're going to 10,000. I mean, I can't tell you how many times we were going to 10,000. And I thought, gee, I don't recall making that, but I've sure heard it enough. This time, the problem I have, it's not a problem, but there's a concern because, you don't want to say it's different this time, but we are in that third phase. We're in that third real big thing. We're going to have a dynamic change. For all sorts of reasons. I mean, when I say, this is the third big bull market in gold, it's the third major cycle in the United States from 1776. So what does that mean? Well, it means we're going to have a wild transition, over the next, decades and whatever. There's going to be a big change. I don't think it's going to be towards socialism, but that's what it looks like. The problem that I've got is what we should have is a major deflationary move where we correct, on the normal cycle thing. And then if you look at the long-term cycle, the 200 years, you should have a revolution we're having, whether they quell it and we go back to the big question is, who's going to win that? Are we going to follow history and fall under dictatorship, which is what socialism is? Or is something else going to happen? I'm foolish enough to go against history and think that something else is going to happen just because I'd like to see the big guy step into the picture. A few things are going to happen very soon. Look what's going on with Deutsche Bank. Back in the move,
Don was bringing up Deutsche Bank yesterday, so I'm interested to hear this.
Well, are they going to be the tail that wags the dog? And, Bear Stearns was supposedly, I mean, obviously they opened the door. And what does the elite like more what does the elite like as much as war? I mean, they like war because, we're their little warriors out there. But the thing that they like is well or better is a depression, because they'll get everybody leaning on one side. I mean, how hard is it to make money when you own and run all the central banks of the world? So what interest rates are going to do. So clearly, you're going to be able to make money in the bond market. How everything's interconnected on the currency thing. So you're going to know which currency you're going to know everything. You're going to know oil. You're going to know everything else. That's obviously why they did it. I mean, we've got a big problem here, and maybe this situation with Jeffrey Epstein, if they don't kill him in jail. I mean, why the United States doesn't have Jeffrey Epstein in a very safe location? I'd put him in Camp David. Okay, because this guy, if you really want to take down the deep state, and I don't know if everybody isn't controlled by the deep state. I mean, it would appear that Trump isn't, but he's still alive, so there's a pretty good argument that he might be, and he's awfully close with Israel. So you've got a bunch of things here that happen, but if that breaks open, you've got, and that's probably the biggest key to really breaking things open, is really getting information out of Jeffrey Epstein, because he goes all the way back to Roy Cohn and the even back in the Reagan administration. So that there's a can of worms that could change things overnight. But apart from that, you've got a long-range thing. When John and I were talking about before, with Japan and with the runaway inflation, that was runaway inflation in the late 70s into 80. Japan was 10 years later, but in the period
I was
when
there
gold,
in Japan during that runaway inflation, and it was ugly. I mean, it was so ugly. This is late 70s, and for an American to go out in town on Liberty and buy just a cold beer, it was $5. I know that doesn't sound like a lot today, but it was a lot. It was a lot for a guy on military pay in the late 70s.
I was traveling over there to speak at one of these conferences and couldn't believe how expensive everything was. That was in the, I can't remember when it was, early 80s or something like that. But anyway, the situation here in the late 70s was runaway inflation. Are these this time? Once everything happens, should be runaway deflation, and that's something that would get in the way of this. Is certainly as far as a move to the upside. The other thing that can get into the way of it is that we are going to need a new monetary system. And I think it's, typically the world doesn't do preventative medicine. Typically the world does everything else, meaning we wait until there's a catastrophe, and then we react to the catastrophe. So that's what usually happens. This time, I would think, like I say, I think there's maybe going to be something that steps in. So a lot of the things here, like the upside projections, which is pretty obvious to see. I mean, if we have currencies, racing to their lows because everybody's doing negative interest rates, it's not going to take long to really cause a serious problem. So you've got, it's not, when you look at this chart in John's potential cup and handle, I mean, it just looks like a rocket to stardom. But there's so many other, we've got so many other things that are of a concern. Matter of fact, if I can just run through a couple of charts quickly, I'll show you what I'm looking at.
Sure, go ahead.
Let's see. Let me bring this over, and unfortunately, I've got to take off today. But I want to show you this. This is what's going on now. I've got a big cycle date for me. Not so much a cycle date, but it's. I mean, I haven't had one of these dates come up since July and October of 2007. I've got one coming up now, and so that really gets my attention. It doesn't mean that anything has to happen, but it just it means that things are, certainly pretty likely to occur. Here's what I wanted to show you here. Why is that doing that? Let's see. I'm just trying to get this over where I can see it. This is the S&P. Okay. What I was kind of keying on was noticing these three tops. This type of top on a daily chart or a 65-minute chop is termed like they call it a three little Indian pattern. Here's the three little Indians. They're roughly equidistant apart and sequential tops. Generally, you have
Man, that might be
huge,
racist. I'm sorry. No, just
Yeah.
kidding.
It could be a kind of Garrett, could be a
Yeah.
5-point reversal too if it comes
Yeah.
down.
Yeah, and the other thing I just
Look at the
noticed-
divergence there, jeepers. I mean,
look at this. I mean, it's just enormous.
yeah.
And everybody, and what's everybody talking about? Well, we're all bullish. I mean, there's a whole bunch of people who have never seen a bear market.
Yeah.
I mean, could the setup be any greater? I mean, anybody, if you were talking to Bernard Baruch and pulled him out of the grave, or Jesse Livermore or W.D. Gann, they'd probably say, hey, just go short and take a vacation for a few years. I mean, but again, doing that in this market's almost suicidal. But I just ran this back in time. By the way, here's the lower channel. So, I mean, at some point, that's probably at least where we should go. I mean, and potentially quite a bit further. But look where this line roughly goes back to the 94 low, which was the launch point for the move into 2000. And you're hitting this point here, you're hitting this point, you're hitting these highs. I mean, then you go boom, boom, boom. It's like, I mean, a chart made by God, right? It's just, is there a message there? Well, I don't know, but you know what? There ought to be. I'll give you, but here's what's so crazy about it. I don't know why that keeps happening when I want to move this chart.
The alternative, we could go parabolic first. This is a chance we could go parabolic.
I've got to get your little thing over here. I've got the thing. Maybe let's see if I hit. What happens if I hit the red arrow? Do I turn off the show?
Because the thing is,
I don't think you can turn off the show.
Oh,
You should be
okay.
able
I
to
see
grab
what
it and
happened.
drag it.
I got it. I got it.
Garrett,
Okay.
if that indicator line of yours turns upwards here, that could drive another up leg.
Yeah, I'm looking for up until about the end of the first week in August. I think we're open for some movement to the downside. So I would like to see that, because, and then I'd like to see a move right into the end of the month. And it might even go into early September, but I think we get a hard and nasty decline after that, and maybe one so much so that the Fed has to come out and do something big and surprising, like a large cut in rates. I mean, I think a cut in rates today is insane. Why? What's the problem? Is the economy not working? Is the stock market not up? What am I missing? Everybody unemployed? I mean, why would you be cutting rates now? I mean, what does that do?
And what is the Fed's justification? What is other than Trump applying pressure, what is the Fed using to justify this rate cut that everyone's convinced we're getting today?
You know what? I'll tell you why I don't get into those conversations. Because at this stage of the game, I mean, I'll get into it if you want, but let's take a look at G. Edward Griffin, who wrote the Creature from Jekyll Island. He's got a recent thing where he talks about the Fed, and it's like, let's stop being foolish and let's call the Fed what it is. It's a criminal organization of robber barons, and the greatest robber baron on the planet. This isn't something that's out there to stop us from having depressions or to help us there. It's only doing that as we play it along. This is a criminal organization that was set up to make them a whole lot of money, period. Anybody who wants to argue that, I said, please. I said, that's like me arguing with a nuclear physicist about nuclear physics, as if I had an opinion that was worth anything, and as if I'd done any work. If you're arguing that thing about the Federal Reserve, then the response is very simple. It's like, you've done no research at all, have you? And therefore, if you haven't, how do you have an opinion? It's kind of like everybody who's angry today. They're all angry because they're all political geniuses. And most of them are college students who aren't really sure whether Chicago's a state or a city, unless they live there, in which case only half of them aren't sure. So this is the type of mentality that we've got now. Everybody's got an opinion, but they don't have any knowledge. The Federal Reserve is simply a criminal organization. It was put together by a bunch of robber barons. It's not federal. It's not owned by the government. So why would we think? You see, in other words, we've all played into it. Well, gee, what do you think the Fed's rationale is? I don't know. Something to make them a hell of a lot of money. There's the real answer. What's their rationale other than that? There is no rationale to lower interest rates. Their rationale is to set things up to give them an opportunity to make an incredible amount of money in the not too distant future. I think that would you agree with that answer, John, or have I just completely lost control?
No, I think you're right. Look, what they're probably going to do today, actually, thought about it, is they may, that because if they really want to get the bang for the buck, they may pull back on that, the debt reduction deal. I forget what they call it.
I think the comments.
When you do unwinding the balance sheet, is that the term you're looking for?
Trump was talking about the last few days, sort of leaning on them to stop that. If they stop that, the markets will explode higher for sure. I think. And right now, we're seeing the turn in gold already. I think this is a precursor to a potential upside explosion in the gold, given that we've just. Look, the silver stocks just went down to 78 and back to 80. That's a pretty decent sized rebound. The silver got back to 1631. It's already 43. And this is a kind of could get very volatile here this afternoon, and you could see a dramatic up move in some of these metals markets.
Yeah, the interesting thing is if you get a real dramatic move in the stock market, if it goes up and, well, let me show you. Here, there's this chart. Now, if we go down, what's the leader? The market leader, and I can show you why, is the semiconductor index.
Yeah, that's, look, as long as they're leading, you got to be long because...
Exactly. In other words, their leader, why? Because they bottomed in November over here, not in March.
Yeah. By the way, take a look at. We talked about this not so long ago. Micron, MU.
Let's see, MU. Here, let's just put it here.
Stock's really gone into orbit recently.
Yeah, I've been looking at the what they used to call the. Now did I get that right? There's Micron, the MU, right?
Right. Now, so if it breaks out and starts going above 50, it's really going to be a big deal. This stock, it's been because I remember seeing some of these big hedge fund managers that were moaning and groaning about this stock and why it hasn't been acting well, but it certainly has gone into a very strong uptrend recently. And Intel, which is worth putting up as well. I think, listen, before this cycle is out, I'm virtually certain that Intel is going to hit an all-time high. So
well, look at, these are the old techs. And let me see if I've got some of the, I don't do a lot on those ones, but look at some of these, John. What are the new kids on the block? These are the old techs from 2000. Right. Take a look at some of the new ones. Look at that. Look at this move. From December, you're down here at, I don't know, what the heck is that? What is that? 52, tripled, 150. Let me put in another one.
What stock is that?
That's Coupa Software. These are names.
Right,
yeah, these are names that I would never have heard of not that long ago. But watch this. This is Shopify. Look at this. These are your new like stocks that ran up in 2000.
50,
this is at 117.
Like a 50.
Yeah, up to 340, and they go on. Roku is one of them.
Yeah, there's about 50 of them. There's about 50 leaders like that.
Yeah, there's a bunch of these, and most of them you never heard of. But look at these moves from 20 or in the teens to 100. They're all up a massive amount.
Yeah.
It's crazy. But here's what I was going to show you. I'll run through these real quick. These are monthly charts, okay? But here's the most overbought market in the world in 2000. We're above that, but look at what's going on here. There's something to really be concerned about here, and look at this. I mean, here again, look at these trend lines. You're coming off. Let's see, when was that? What am I looking at? Okay, 2001, 2002, coming off that low and running through here. But you've got these two tops here, and then going back here to the top over here. Look at the, we're running into it. Look at the divergence. Yeah, I mean, this divergence is just incredible. And if it breaks out, what's it going to do? Can the market really run up there with the sentiment that we have? I doubt it. Here's the daily. I mean, getting down to reality on the daily. There's January. There's September. We're coming in here. We hit it. It's like boom, boom, boom. Major top. Who knows what? And then you've got your channel, so you can run back up here, but in the short term, you're kind of pushing it. I mean, if it broke out or they did a 0.5%, something like that, it would be crazy. But look at the semiconductors; they've topped and turned down. So the question here is: usually the semiconductors are telling us something? Are they telling us something now? Their implication would be is that we got to go down. Now, if you look at but look at this. Here's the Russell. Now here's the top that takes you back to September of last year. Here's the December low, and you've got this. And gee, when I look at this, what does my mind see? I see a shoulder, a head, a shoulder, a trend line, a neckline, and we just broke out of it. Now, is that going to be a fake breakout? Maybe, but holy smokes, you've got yourself a breakout. You've got everything else pushing tops that are saying, boy, be careful, look out, this is insanity. Look at the divergence. Are you blind? And then you got a breakout here on this. You've got the semiconductors, which ought to be going the same way. They're turning down. You come down here to the spider small caps. This is the definitive moving average here, and look what it's done. I mean, when you break it, you're going down big here. You come up and hit it, it gets rejected. You come up and run through it, have a railroad top. You break down, you come back up, you're hugging the darn line. Now you're kind of breaking out. So it's like some of these little things. Now, what might be happening, John, is maybe we're getting just a simple rotation, and that rotation is finally getting into the things that, Boeing got beat up, Apple got beat up. Both of them have been up the last couple of days. You got a situation with the small caps. They had been not doing much, and so the little bit of money's maybe digging in areas where it hasn't been before. But look at the VIX. Look at the VIX. We're down here. This was a top. Here you get down here. You're looking to sell the market. Here the market corrects. Here it corrects. But here in a matter of 2 days, we go from a sell to where we're pushing the upper one, which would be obviously a sell signal on the VIX and potentially setting up a buy signal. If we break through here and do a run, I mean, then you can get a collapse. I mean, here's an upside breakthrough. You go up, you fake down, then you start running up. You're going to get a market that drops hard if that happens. Is that going to happen here? I don't know. I mean, but you're going from VIX buy to VIX sell potentially pretty quickly. I mean, you're really compressed. You've got McClellan down around 0. So what that's saying is it's setting up the potential for some kind of a big move. And, because of where the market is, you'd think that big move would be down, but maybe it's that last knee-jerk move that sells off the market a little bit for a few days. And then I'm thinking, to me, I've got a turn date, and I'm old enough and hopefully smart enough to not talk about a turn date until we get there. Give me 1 second. Anyway, you've got a bunch of cross currents here. I mean, you've got the AD line. Matter of fact, let me pull that up. I mean, the AD line makes it look like we. Gee, I've got to get. I'm moving. I've got to get more fluent at moving this webcam thing around. There, now I just moved a portion of it away. Okay, here we go. I just need to get into my lower screen here so I can find this chart and show you. Let me bring this over. This isn't the chart I wanted to show you, but it might be worthwhile. I mean, here again, you're in no man's land. This is full moons. This is new moons. We've got a new moon today. I didn't know this, but apparently we're coming into an open space in the atmosphere where we're going to get bombarded by all sorts of particles. You can probably Google that, and it's today and tomorrow. Ironically, right at the time of the Fed meeting, and these guys, they probably know these things. But let me show you the AD line here. Here's the AD line. This is, well, what do I have here? September.
We were talking about that yesterday, and with the advanced decline going to new highs like that, that's just unbelievable.
Yeah, see, yeah, I mean, it's unbelievably bullish because we're up there, but here's where, now this trend line goes way back, I believe. Yeah, I mean, here, is this a good trend line? I think so. I mean, gosh, look, we're back to 2014, and we're coming along. We're hitting. Look where we are. When is this? What's the date here? January 2018. So here, well, I agree with John completely. When you're making new highs on the AD line, usually you're going higher, and usually you don't have to worry about it. I mean, when did you peaked out in the first quarter of 1998, and you had a year and a half before you topped in 2000. So generally, it's a good thing. But here you are in January Here you are in January of 2018 on this trend line, and the message there is you better get out because that was the top. Here you are on, now again, this is not September, this is the end of August. Again on the line, and you were able to run up until September, but on September 21st, you got a divergent sell signal, and then on October 3rd, you got another one, and then you got yourself, a 20% decline coming up. So here we are again, and is this an A, B, C? I don't know.
Garrett, how far back does that go? That chart?
Oh, I don't know. Let's find out.
It'd be worth going back and having a look at the performance period. See, look at that. That's
now here you are. Look at this, 1969. This is when the market couldn't get over 1,000 in the Dow. And there you are. You can't get over it. There's your top.
Did that predict the future or what? Jeepers.
Yeah. Last week, guys. Go ahead.
Just go forward into the 70s now.
Now, by the way, now here, let me show you the market top. Okay. Here's the market top right here. What was going on? This is the end of 72, and right here is a divergent signal, and this is early 1973. This is exactly when the market topped. Nixon was the president. Watergate was going on. But look at this. Here's where you are. Here's your AD. When you're from here to here, this thing is saying this is like something directly into your blood system that says you better sell.
Yeah.
But that's
can you move it along a bit into the 70s there? Because
now that's not happening to the degree anymore. Now look at this. Look what happens here. Here there's massive lead time. We had 5 years of lead time on what we were just looking at. Now look at this. Here's 1974. It's a bottom. Here's the October low. Here's the December low. What happens? It turns monumentally. There's no lead time.
Yeah.
Okay. I mean, it's just, and things have changed because now you've got so many new stocks. You've got ETFs.
What's interesting, what's different. See, what's different today and this is what I've been pointing out about this index. You know, you can see that, go back to 75 for a second. Okay, see that huge, the rally, as you know, we had a monumental fall because it was near depression, but you would never know that from 75 to 76 that the market doubled. The actual stock market.
Exactly right. Yeah, I mean,
for many years, the advanced decline line has been underperforming the market, and it did so. I think we'll be able to see for sure if you can go forward into the 80s and 90s.
Yeah, watch 82, because this point right here is the last time the market sold at book value. I'm sorry, this is the second to the last time. The only other time the S&P got down to book value with a P/E ratio of single digits and a yield of about 6.3%.
82.
It's right here.
Right. So look at that. You know, that's, see.
Now let me compare.
If you're a student of this chart, what does that meteoric rise off the 82 low tell you? You're in for a mega bull market.
Oh yeah, no question. And I want to see. Look how. I want to see if we got lower. Oh, yeah, you're going to get a little bit lower, but this is where they were calling for a depression. They didn't even mention depression in 73, 74. I mean, some of the people that were pretty smart did, but they really talked about a depression in 82, probably because of interest rates and so forth, peaking in November of 81. They peaked right here, interest rates, right there.
Guys, we had a comment last week from Richard, who, and this guy, well, he's very talented and has a lot of knowledge about markets, but I didn't get a chance to share it with you guys last week. I didn't see it till after you left, but here's what Richard, his comment. He believes that the zero interest rate policy just postponed the K-wave winter, which is a deflationary cycle,
contrarian wave,
which will be brought on by the debt implosion, which is coming, in quotes. I have August 9th to the 12th as the next important turning point for at least a potential short-term decent correction. Could be putting in a wave one high with, hang on, let me scroll down, with a 2 wave to take place. We would then have a 3, 4, 5 wave to complete a major bull market top. Would appreciate both Garrett and John's thoughts on this.
Let me ask you clearly, because I have the same turning dates, August 9th. That's a weekend. The 9th to the 12th is a weekend. So the 9th and if I'm not mistaken, somebody can check me on that. I think those are two back-to-back dates, the 9th and the 12th. I have a big potential turn date there. What I'd like to see is for the market to drop into that. I think he was talking about it rallying into it. Is that right?
I believe zero interest rate policy just postponed the K-wave winter, which is a deflationary cycle, which will be brought on by the debt implosion, which is coming. Have August 9th and 12th as next important turning point after at least a potential short-term decent correction. Could be putting in a wave one high with a second wave to take place. We would then have a 3, 4, 5 wave to complete a major bull market.
I think there's a big turning date. I think that's a big turning date too. I have that in my work. Now I've got a bigger one coming after that, but I've got that as a big one. And I think it should be positive. I've got reason to believe that it should be positive on the bigger picture. And if we're declining into that, I'm going to look forward to that point to go long and to really play this thing. However, if we are going into it without a correction and working our way higher, then I think we got it. It goes the other way. I'm uncomfortable with that today, because it's not August 9th. Like whatever, we're too far away from it. But if we went into it and we're making a high, which I think is what he's saying, I'm not sure, but that's what it sounded like. And I can see that. And in which case I completely agree with him. If we're making a high and if we're really stretched out, then I'd like to short it. What I would like to see, which nobody cares, but if I could see it as a low, I'd really feel good about that. And because I do think it's a meaningful turning point, and I think there are some reasons why it would normally be. And what could happen if we're going into it and we're still going up and we haven't had a correction, is that we could get, and rather than being a turning point, it could be an acceleration point. So that's a meaning to me. That's a very meaningful date. And we'll have to see what it's like when we get there. But I think you're going to see a meaningful market move after that. And I hope to see it go. I hope to see it going down into that. That's my own personal preference, because I think you're going to get an upward move out of that. If it's making a high, then you've got a problem, because it's the normal thing would be, well, short the high, and that may be the thing to do. But that's the one point where I would think that it could be a continuation, as opposed to just a normal turning point. So I'd be interested to talk to him about that. That's it sounds like we're on the same page with the deflation, the zero interest rate, all the other stuff, because this is again, I think the Fed, the people that run the Fed, this again, think about it. When you have a new age, when you go from the agricultural age to the industrial age, what happens? Well, before that, you had a bunch of rich land barons and kings. I mean, those are your big players. But now you've got something new. It's an industrial age. What do you have? Well, you create a bunch of new robber barons. And when history, if you start
Garrett,
to read history...
Can you hold that thought just 1 second?
Sure.
I can't believe I did that. Quarter point.
Oh, okay.
Hang on.
And now it's going to go all over the place. Oh, gosh. Yeah, there it is. There's
cutting interest rates. It says the expansion is likely to continue, but says, quote, uncertainties about this outlook remain, end quote. On forward guidance on what the Fed's going to do next, it says the committee contemplates the future path of the target range of the federal funds rate. It will act as appropriate to sustain the expansion. That's the same language it used in June, which forecasts the current cut. The vote, 8-2, 2 dissents. Esther George of Kansas City, Eric Rosengren from Boston, both dissenting because they wanted to keep rates unchanged. On the economic outlook, surprisingly the same from the months when they didn't cut rates. They said the labor market remains strong, same language. Economic activity rising at a moderate rate, same language. Job gains solid on average, you got it, that's the same they used last month. Unemployment remained low. Household spending appears to have picked up. Business fixed investment has been soft, that's the one negative they had. Inflation, they say, running below 2%. Market-based measures have declined, have remained low, and survey-based measures are little changed. So very much the same characterization, and actually a little bit better than prior months when it didn't cut rates, to now cutting rates, citing global developments and muted inflation. Melissa?
All right, there you go. I just wanted to let us all hear that. Now, please continue.
All I was saying was, when you're changing from eras, multi-decade eras, from agriculture was multi-century, forever, right? But then all of a sudden you have an industrial age. That creates people that now history calls them robber barons. What were these people? They were ruthless business people that used bad and evil practices. Check it out. What were they then? Well, they were the great leaders of America. Everybody looked up to them. Oh boy, these are, you had a country in one depression after the other, and here are these guys, and they're making jobs, and they're doing this stuff, and they're the great heroes and so forth. But history goes for a while. What are they? The robber barons. Now you've got another age, the industrial age. And the stocks that John was talking about were from the early part of that age in 2000. Really, it started in 1980s or so. So boom, you're moving into the information age. And that's a whole new deal. What happens? You create new robber barons. You got new guys. You got Jeff Bezos. What do we think of Jeff Bezos? Gosh, we love Jeff, don't we? This guy did Amazon. You can buy everything cheap. What a great guy. What a fabulous guy. Owns the Washington Post. He even tells us how to think. I said, but what is it? What if you're a mom and pop shop? I mean, what's the reality of the situation? Nobody thinks anymore. But let me share something with you, and then I'll get out of the way and let you think about it. Here's Jeff Bezos. What a great guy. He creates Amazon. Does everybody like Amazon? Everybody likes Amazon. Who doesn't like Amazon? Well, a bunch of mom and pop shops that had a wonderful business and everybody loved it, but they're out of business. What does it do to the economy? Well, you've got a whole bunch of mom and pop people that are out of business. Well, we don't care. We got Amazon. They're in business. Doesn't do anything, does it?
Well, the one caveat I would throw in there, Garrett, is that while, yes, in fact, he did negatively impact brick and mortar ma and pa, at the same time, with the other hand, he invited them to bring their business online.
This is true, but let me finish that point. First of all, bottom line is a whole bunch of people are out of business. Now, is everybody out of business? No. But what are we losing? We're losing, big, major name Dow Jones companies like Sears, and that type of thing. Big retailers, just what you said, they're gone. What did they used to do? They used to pay a lot of taxes, didn't they? Mm-hmm. Those big companies paid a lot of taxes. What about the mom and pop? They all paid taxes, lots of taxes. Yep. What does Amazon pay? Let me fill that in for you. Nothing. Amazon pays nothing. So let me put this in perspective. What has Amazon done? Have you got a great guy, Jeff Bezos? Oh, yeah, everybody loves him. Oh, boy, look at his wife. The women like her because she got a divorce, and now she's the second richest person in the world, if we're to believe that. But what's the reality?
I take it you don't believe that?
That she's the second richest person in the world?
Yeah.
I don't know. Is her last name Rothschild? I don't think so. It's Bezos.
All right, fair enough. I know where you're going.
I think the Rothschilds...
Not everybody parades their money around. Yeah, okay.
Well, no, some people are smart. Like the Rothschilds. But the Rothschilds you got a $22.5 trillion deficit, right, John? And climbing?
Right.
What could the Rothschilds do? Well, let's see. At the end of the day, I reach in my pocket and I put my change on the table. Well, with the Rothschilds, with the end of the day, when they put their change on the table, they could just pay off our entire debt, and it wouldn't bother them one iota. Think about that for a moment. Anyway, but back to this other thing. We got new robber barons, and they're if you're the government, how is it that they allow this to happen? What didn't they do antitrust laws? Why in the world would you have all of a sudden big corporations that are no longer paying taxes because Jeff Bezos put them out of business?
Hello.
And number two, you've got all sorts of mom and pops who paid taxes. I mean, how many of them? Tens of thousands that are out of business and no longer paying taxes. So you're not getting taxes from these big corporations. You're not getting taxes from mom and pop. So you lost that. Now you're paying then unemployment and welfare, and so you're losing there. And what are you getting with Amazon? They're not paying taxes either. So it's a monumental loss to the government and a monumental loss to the economy. Why would anybody in their right mind allow that to happen? Well, Obama would allow it to happen because he doesn't know the difference between a debit and a credit. And I think he has a different agenda. So that's one reason. But now you've got other people in there. You have to ask that question. Remember, the Fed's a criminal organization. Remember who's running the show. The robber barons, new and old, are running this show, and they're doing it to make money for themselves. And I believe this will come out sometime in the future. Now everybody says, gee, that's crazy. I said, oh, have you read The Creature from Jekyll Island or any of a number of other things, or The Secrets of the Federal Reserve or anything? So that, and of course nobody has. But think about that. I mean, that's just one example. If you get onto Google, it's even worse. Do you know that there was an enormous amount of people completely removed from Facebook and Instagram the other day? No. I mean, just completely massive numbers. That's these people are doing censorship. How about G5? You think that's going to be a good deal? Go on the internet and find out the power that goes into G5. Take a look at the amount of electricity to run a G5 location as opposed to the other one. It's monumental, and they're all over the country.
Now, who was removed? Who was removed and why?
This they're doing it on Twitter too. I've got some. I'm kind of up with keep track of all the elites on Twitter, and not the super elites, the people in the hundreds of millions. These are sort of the 100,000 type people. And I see people up around 96, 97,000. Next thing you know, bang! They dropped 2,000-3,000 in a day. And I personally lost. I was up 11. I had about 1,140 new followers last week, and bang! They just took them back. Right, it just ripped me off about 1,000 followers, just like that. I mean,
Wow.
I put out a couple of tweets last night. I mean, I dropped 50 followers like in a heartbeat. It's just crazy.
Yeah, I mean, this is criminal action. I mean, what people don't remember, these people own the news media. They've owned it forever. So they're telling you what to think. They are not reporting the news. They are selecting the news that they want to tell you. They're then telling you how to think about it. And then the third thing that they're doing is, now we will make you angry. We'll put on one of our news guys and he will make you angry. Will he tell you the truth? No, they don't have to tell. They don't have to tell the truth. Everybody assumes they do, and they sit there and they make you angry, and that's what they've done. Now they've removed all the stuff. What do they want to do? Let's remove guns. Well, why? Oh, well, we'll send somebody down to shoot up some people in Gilroy, and then we'll make a big to-do about it. You can bet they're behind this stuff, and people think, oh, that's crazy conspiracy theory. Where did you hear that? Well, they put it in the news. Well, who put it in the news? Well, the guy's doing the conspiracy. So it's wake up. Come on. And John's just telling you, he had stuff wiped out. Those aren't people that quit because John's input is so bad. These are people that were removed. John's input is good. I mean, it's just, they've dumbed people down so much. I mean, I just found
first time it took me from 23 down to 2. Jesus Christ.
Yeah, I mean,
I built it back to
to
about 20. I was getting back in the 28s last week, and now I'm at 20s. I think I'm at 20s, going to 26.
Yeah, and what's John's crime? Well, let's see. I love America. I'm a patriot. I'm an honest guy. I pay taxes.
Trump.
I'm employed. And I believe in God. Well, gee, John, what the heck is wrong with you?
No, if you retweet certain tweets, they get you. One time I said this before, that I retweeted something from Seth Rich's mother about this conspiracy. And it shut me down. It shut me down in a nanosecond. I mean,
exactly. Dang. There's so much stuff on there that's not hitting the news at all. Listen, I in my newsletter, which I've got to finish today, I'm putting 3 things in there that are short videos. One of them is a video. I mean, can you believe this? Here's somebody who's a liberal. They voted for Hillary Clinton. They're liberals. They're a liberal supporter. And my comment about him is, I respect this person. I think he's a great American. Now, does that sound like me? Let me tell you why I say that. And I do respect him, and I do think he's a great American. And we have a difference of opinion on Mrs. Clinton, but here's why I like him, and here's why I think he's a great guy. He came out and exposed Google, and it says Google was the one that could be responsible for many millions of votes going in one direction, and that they definitely were exactly for the reason that John telling you. It's censorship. And what they say, they get messages out to all their followers. These are the new robber barons. These people, Google, Facebook, you can name them. This is a bad group of very bad people. And if Zuckerberg looks like a nice, harmless little angel, paint a picture of Satan on him, because that's really what this guy is. This is a dangerous, bad person. Simple as that.
Hey, you mentioned guns just a second ago. And
mentioned who?
You mentioned guns.
Oh yeah, I mean,
I just want to throw this in. We have a trial going this week, so we have a lot of new people in the community. And we have a channel on Telegram. It's called CFRN Breeze. And that's where, when we're not talking markets in the discussion group, people can just talk about their thoughts, ideas, opinions, post pictures, whatever, in the CFRN Breeze channel. So one of the guys who's on the trial this week, and I hope he's listening, because he had the courage. He knew he was in the midst of a lot of conservatives. Okay, we don't hide that. But he had the courage to put forth his thoughts and beliefs on this gun subject. I don't agree with him any at all, but I respect the fact that he had the courage to post it, and he didn't do it in an inflammatory kind of a way. And I also want to thank all of the other members of the CFRN community because they did not eviscerate him. I mean, people made it clear they didn't agree with him, but there was a healthy discussion, a healthy discourse. And that's kind of what we stand for. And that's what freedom of speech is all about. His comment started out, it went deeper, but just let me give you this first comment that he made. And again, I appreciate you posting it, and I appreciate the way the rest of you on the channel handled something you did not agree with. He said, here's a thought. Why not ban, because we were talking about this the night of that shooting in California at the Garlic Festival. He said, here's a thought. Why not ban guns altogether? Here in the UK, most police officers don't carry guns. Plus, if someone has a knife, our police officers do not murder them. At the very most, they will use a taser. Your gun control is out of control. Your murder rate is out of control. Unfortunately, the rest of the world sees the U.S. as a warmongering nation. Now, let me just say, emphatically, I could not disagree more on any of those points, but I am proud of the fact that we have a place where people can come on the internet and express their opinion, and then have a healthy discussion about it. So,
I agree with him on the warmongering nation part. I mean, they tell us we're out there to protect everything, but we don't get the news that the rest of the world gets. I mean,
oh no, what an eye opener! Everyone, you should find somewhere on the internet some TV station, radio station in another part of the world, and when the day's events unfold, it's like black and white. You know, we see it and report on it one way, or our controlled media does, but these other countries, man, it's like, well, wait a minute, I thought this happened, but you know. What is your foreign news outlet of choice, Garrett?
Oh, I look at a lot of stuff. I mean, you know, RT is one thing, the Financial Times, but lots of stuff on the various websites.
Do you need a subscription to the Financial Times? Seems like every time I click on one of their articles, I hit a paywall.
Yeah. I think I scour mostly the stuff on the internet, and I can you know, Natural News is a good source. There's an interesting one called, what is it, Mint something, and it's written by a Muslim woman. But it's interesting because she's exposed you know, a lot of this stuff that we don't see on the news. And I think it's they did an expose on Jeffrey Epstein that was incredible. It's a 3-parter. They got the first 2 parts out. That's called you know, I think I closed those things up when I let me see if I can
my son's grandparents, my kids' grandparents, a long story, but anyway, they're kind of their grandparents, but they're in town for a visit. It's my daughter's birthday today. And they were driving in the car yesterday, going sightseeing, doing different things. They're from New Mexico. And they put the Democratic debate on the radio. And my son comes home, and he's like, now my son's 17, just turned 17. He's like, Dad, I had to listen to the Democratic debate on the radio. He goes, oh my, I thought I was going to go crazy. Dad, it was so hard for me not to speak up and say something, but you told me not to upset the grandparents. My daughter, she's a little imp. She took her Fox Nation sunglasses with her that we got when we went to that event. And boy, that sparked some controversy. But my son says, and I said, well, son, you know, calm down. I watched the debate. He goes, well, why, Dad? I go, son, there's a saying, keep your friends close, your enemies even closer. I said, it's important for us to know, even if we don't agree, we need to know what they're thinking, what actions they're proposing that line up with their thought, because we have to take defensive measures from time to time. And he goes, oh, Okay. He goes, well, it still ticked me off. I mean, that kid is such a he could be. Both of my kids are so, and they go to schools because of where we live in Phoenix, out by South Mountain. Not too terribly far from the border. My daughter is the only Caucasian student in her class.
Wow.
In her grade, right? And so some of the liberal speak that comes out of the mouths of these teachers that I get reports of at the dinner table at night, sometimes it makes it difficult for me to digest my food. And I've spoken to these people, and my kids know that when they cross a line, they're to stand up and go, I respectfully request to step out of the classroom till this is over. And they know when to play that card and when not to. Because again, I believe in listening to the other side of the argument. Go ahead, Garrett. I didn't mean to cut you off.
Well, I was just going to say that the easiest way to find out what is proper thinking, because proper thinking has been removed systematically and purposefully for decades. They've created this. You didn't see this. You didn't see this in the 80s, and you sure as heck didn't see this in the early 60s. You had people that thought right because they were taught the golden rule. They were taught the difference between right and wrong. Make your decision first on right and wrong, not right and left. That's why I like this guy. Now, I'm going to have this in my newsletter, and when I finish it up, there's 3 things. One of them is that person speaking, and that's the way we all have to be. He came up and exposed this because it's right and wrong. It was for Hillary Clinton's benefit, who he was backing, but he was man enough to say, this is wrong about Google. And what a great thing. So I applaud him for that. I think it's terrific.
Some lady last night was talking about Google shut down her ads for her campaign. She was the most searched candidate at some point. Who was that?
Marianne Williamson?
I don't think it was her, John. I think it was someone else. Somebody in the audience might know.
They probably would. See, now, this is a country that's had many, many Muslim terrorist training camps operating in this country for about a dozen years. It's like, how could that happen? Why would that be okay under any circumstances? How can you have many bases of Muslim terrorist training camps operating in this country? Google it if you don't believe me. Pretty soon Google will be able to remove it. But Hannity
what is the proper Google search to bring that up?
Muslim terrorist training camps operating in the United States.
Okay.
When I first learned of it, there were 75 of them. That was at least a decade ago. How does that happen? And yet we're gonna take John's website and remove some people, but here's a Muslim terrorist guy. He's not getting removed. They're not removing that, are they? They're not removing the a racist black person who doesn't like white people. That's okay. But if you talk about, if you want to find out what's right and wrong in the world, because you can't find it anymore, take a look at the Constitution. Take a look at the Bill of Rights. Why is the First Amendment is freedom of speech? Why? Because it's the most important. If you can't freely speak, then your voice is muffled and there. Well, they want to remove that. How do you remove that? Well, you remove it with political correctness. Who defines what's politically correct? They do, and they tell you, and then they tell you how to think about it. Isn't that what happened? Secondly, what's the next right? For this other person who's over in Europe or London, wherever he is. Guns. Who do we need gun control for? The NRA? No. We need gun control for criminals. And if you take away and make it illegal, the criminals are going, awesome, dude. Hey, this is cool. We can have our guns and use them any way we want, but all the good people that would stop us otherwise, now they don't have any guns. It's a holiday. So that the person means well. I'm in agreement with everything the liberals say, given a whole bunch of, in general, if we had an enlightened society that didn't commit crime and if everybody was brilliant and never committed crimes and was honorable, my advice would be, well, why would you have any laws at all? Nobody's going to do anything that would, but that's not what we have. We have murderers and liars and cheats and, define what you have defines what you need. And if you want to find out what's the proper thing to have, find out what made this nation great. And that was the Constitution and a young and hungry workforce. When you get fat, happy, and decadent, that's what happens to your mind, and you get this kind of stuff. We're just following history. That's what we're doing. We've got to stop that trend. Is this liberal trend worked? No, it's what brought us down. When did it start? When did it get instilled into our system? Around 1970, they started putting it in well before that. Otherwise, it wouldn't have happened. But they completely changed our educational system to something called progressive. Well, how progressive was it? Well, pretty progressive. It took us from number 1 to number 35 and falling. We're the stupidest major nation out there as far as our average intelligence. I mean, and knowledge. I mean, intelligence is one thing, knowledge is another. So how has it worked? Horrendously. Are they talking about that? No, that would be logical and looking at facts. We don't do that here. We're trying to ruin you. What they're trying to do is very obvious. They're weakening us, and they've told us this. This is the elite has put this out in the past. They have to tell you, go read the Georgia Guidestones. They want to drop the population down by about 90%. Once they take over, that'll be one of the things that happen. What's the FDA there for? The FDA is there to keep people who have legitimate things that can come out and heal people and make sure that they don't get in the hands of the public.
Well,
right?
yeah, it's the pharmaceutical lobby.
I mean,
it's one of the most
they're certainly
powerful
not there to make
there.
you well. Do pharmaceuticals make people well? No, they mask symptoms.
Exactly.
Anyway, I better run.
All right.
I appreciate you guys for your time. I'm sorry about the Google and whoever did that on losing your people, John. Hopefully they somehow get in there.
It's just you have to go back into bat, but it's difficult because you're only allowed to follow a certain number of people to build up your volume and stuff, and it's a mess. I tell you, if I could get hold of somebody on Twitter, I could fix that company in 5 minutes and make it a much better deal. Because what the problem with Twitter is, there's no incentive. If they created some incentives, like half the problem is, I see people who have these statistics that come out, and some of them, they follow 50 people, right? And the way the game is supposed to be played is, if you follow somebody, you follow back, right? That's how the Twitter got built. But now the guy gets 50 followers and he loses 100 followers or 150 followers. That's kind of self-defeating. Why is that happening? So you got to incentivize people to follow each other. If you do that by giving them more points, the Twitter, the people will build up their following much quicker, and ultimately make the company much more valuable.
Yeah.
So
well, the problem is, though, you don't have. It's not about fairness. It's not about doing the right thing. It's about getting the wrong message out there. They're obviously.
Oh yeah, listen, these guys have become. They're out to get. Look, Twitter is an amazing platform because you can detect the trends that are going on. There's we talked about it on the show. Who are the people who would be for Trump? He's got most of the police, the military, and the law enforcement behind him. He's got all the 6 million new jobs, so basically a vote for Trump. And he's got the walkaways. He's got the black community going over to him, and he's got the Latinos. There was a poll that came out yesterday saying he's got 40% support in the Latinos. That's gigantic. And that same poll had him at 8% for blacks. I don't think that's right. I think it's much more like 30%. But
if they made their decision on who helped them truly and who hasn't.
At the end of the day, listen, I think the average, even though they might not like him for whatever reason, but at the end of the day, when they get in the voting booth and they got a job and things are better than, if they're better off than they were 4 years ago, they're going to vote for Trump. And, listen, they didn't hammer home this point in the 18s. They got shafted in the 18s because the Mueller extended the the thing through the 18s to ensure that the Dems would win the House. And secondly, they didn't really hammer home, are you better off than you were 2 years ago? That's never happened in a presidential election before, because the country has changed so dramatically in 2 years that people are feeling the difference already. You know what I mean? Look, right now, Trump's sort of like, if we can get through the next couple of years or year and a half at the same pace as before, I mean, Trump's going to be the greatest job creator of all time, and that is really something. He's got the potential to do that if they can keep this economy going long enough.
Wayne just shared a timely quote from Voltaire. To find out who rules over you, simply find out who you are not allowed to criticize.
Yeah. I used that in my my recent observations, and
Hey,
that
Garrett,
gets right down to.
Can people get on the mailing list for your observations?
Yeah, I
don't know if you distribute it to the public or just to select people.
I want to put this in one of these days when
I'd be happy to publish it for you if you'd like it published. Think about it. You don't have to decide right now.
Yeah, I'll tell you what. This one has got some very interesting things in it that I want people to see, because I have that liberal. How often do liberals post something by a conservative? Never. But I'm posting this thing about a liberal who voted for Hillary Clinton and praising him because he chose between right and wrong as opposed to choosing between right and left. The second thing that I have on there is a very interesting article, and it's titled "The Dumbing Down of America by Design." I've been talking about this, I say, for years. The reality is it's been decades. And this article is interesting. Not written by me. It's written by a West Point graduate who was a military officer who brought out virtually every point I brought out. He talks about, God bless him, he knows about Charlotte Iserbyt, who wrote The Deliberate Dumbing Down of America. He talks about that. He talks about Kissinger and Zbigniew Brzezinski. He talks about he talks about Huxley, except that he mentions Huxley's brother, who was actually more involved in it's all about brainwashing. They hired Edward Bernays. Edward Bernays was Sigmund Freud's cousin. I mean, they all know how the mind works. They use military brainwashers. The public has been brainwashed. But if you ask anybody, the most brainwashed people out there will say, "Well, I'm not brainwashed. It certainly hasn't affected me." It's yes, it has, and it's done quite a good job of it. That's a very interesting thing about Voltaire, and it's very interesting. Who can you criticize? Is the white male the bad guy? Apparently not, because you can criticize him all day long. So he's not running you. Who are they talking about? Who can't you criticize?
They say Trump's an equal opportunity slammer. He'll slam anybody.
You can criticize
Left,
Trump.
right,
So he's not controlling you. It's not Trump. I'm gonna leave that out there as a question, because this one, at some point, that's a very good thing to talk about. But I don't want to get into that now. You got to think about who it is that you cannot criticize. And it was purposely set up that way, and it gets down to the censorship that's going on, the fact that they're poisoning us with the food, the fact that fluoride doesn't, help you. It makes you stupid. It makes you less intelligent, I guess, is the thing to go. That's about all it does. Pretty good rat poison. Stuff like that. It's out there for everybody to see, but the problem is the news media, nobody's allowed to talk about it. It's just, John brings up a good thing. He's talking about Seth Roberts' parents who, boom, can't talk about that. Boom, it's gone. In other words, here's a great thing, and boom, we're not going to let you do it. It's not. So as far as the news media, that doesn't even exist, because John wasn't allowed to put it out there. And
John,
but if you're talking about terrorist training camps, and gee, why don't you join ours? Oh, well, that's okay.
John, that guy that you always talk about, who went to the White House so many times during the who was that? What's that guy's name? the one that nobody ever talks about. He must be on the phone. All right, good. I'm sorry. There's a guy, John's always talking about, some bad actor who went to the White House. Gosh. almost
Visited many times Obama.
Yeah.
Yeah, I know who you mean. By the way, there's a bunch of people like that. Obama, the Queen. I saw an interesting quote. The Queen, to run all of her stuff and all of the things, and pay everybody and take care of everything, spends $59 million a year. You know what Obama spent? And this is for all of his friends, bringing in people and probably doing all the clandestine things. $1.4 billion. Excuse me?
1.4 billion?
Yeah. How do you get away with doing that? First of all, how are you even allowed to do that? Anyway, it's again, people don't look at news. They don't find news. It's not in the news. So when you hear stuff like that and all these other things that are absolutely factual, and you should be able to see. I made a comment in my newsletter about something, about being able to see this thing, and the comment, part of the comment was, shouldn't it be blatantly obvious? I mean, the fact that the censorship is going on, that 90% of the people don't even know there's any censorship going on. So when I say stuff like that, what you got to think is, when we say obvious things, like these things are being done, this is not there. Fluoride. You talk about GMOs. 90% of the people out there have no clue. Gee, what's he talking about? I don't see that in the news media. Well, I mean, this dumbing down process. By the way, Dwayne, why don't we get together, because I'm going to put some of this stuff in there, and it would be really good for your listeners. The two videos that I share, one of them's 5 minutes and 45 seconds. That's the one about the liberal person who I respect so much for being honest. The second liberal. The second video, not liberal, is by Bill Whittle, and he talks about the millennials and the problem that's been created, and it's just crystal clear. And then the other thing is about 4 pages about this West Point person talking about, and why do I like it? It's because the guy has regurgitated about everything I've said for the past number of decades, and he's done it in 4 pages. So I thought, now here's something other than me saying literally exactly the same thing. So I'd like to, let's figure out a way to get that to you, and then let you and I talk about that publishing thing. That might be that's a great idea.
Yeah, I'd be happy to set you up a blog. So that, of course, you can publish your observations there, but then anytime on any given day that you want to just log in and share a couple of thoughts with people, you can just type it up. And
that's a great idea. I didn't even think about that, and I'd love to work with you on anything, so that would be terrific.
Okay, let's do that. We'll talk this afternoon.
Thank you and your audience for your time. I appreciate it, and I look forward to. Let's talk later, maybe in the afternoon or something, if that works for you.
I would love that.
Same here.
Okay.
Good, Dwayne. Thank you so much.
You bet.
Okay. Bye.
Okay. That's Garrett. Wednesdays, as he is able, he joins us. And John is still with us. I think he's just on a phone call. So I believe he'll be back here momentarily. If things go according to plans, I will get that blog set up for Garrett on our website. And you guys, and I saw that request for public email address there, Wayne. I'm going to also set him up with an email address, garrett@cfrn.net, and that's one that he'll be able to give out publicly. Okay. So it's not working yet. I've still got to set it up. All right, where did we leave off? I think we were just getting ready to take a look at the Concierge Trade Alerts. If you want to take a screenshot, here's the chance. They got out last night at 7:50 p.m. Eastern. Okay, 5, 4, 3, 2, 1. Okay. Now, we have 2 types of alerts. Concierge Trade Alerts, which you just saw, and the Logic 247 alerts, which I'll show you in a minute. Now, here's the difference. And it's really important to understand the difference so that you can use them in the manner that I think's in your best interest. But you'll ultimately decide that. The Concierge Trade Alerts are a static report issued shortly after the Globex open each evening. As you can see, Globex opens at 6. I was running a little late last night, but I do try my very best to always get them out by 9 p.m. Eastern at the latest. Look at the market following through here on the S&P. Okay, now you always hear us say important prices, important areas, almost always tested. So we had a trigger at 30.08. Now we've got a second trigger at 30.08, and we hit the weekly trading zone. And what did we do? We bounced. Not a huge bounce as of yet. And if we don't watch it, if this ends up being a red candle, because there's still, 20 minutes, 21 minutes left in the life of this 30-minute candle. So we can see already that once we touch that zone, was it to the tick? Come on, the charts. Yeah. All right, I didn't have it. It moved before I had a chance to measure it. But I'm going to guess, 3-4 point bounce, something along. We can go to a smaller time frame, like a 1 minute, and check it out later. But right there, we hit the zone and bounced. Okay. Now remember, these numbers come out to the partners and passport holders every Monday morning, 6:15 a.m. Eastern, before Wall Street even wakes up, so that all of our traders, are able to get their charts ready for the week to come. Up here, you picture this. Price came down through this weekly trading zone. Now, we've already hit that zone a couple times, so this is not a pristine example, but you'll get the idea. Price sliced through the zone. Remember, there's 3 things that can happen at a weekly trading zone. The most likely is consolidation. Second most likely is rejection. And that's actually rejection right there. See how price came down, touched the zone, and then retreated. In my mind's eye, I see someone reaching out to touch a stove. They find out it's a hot stove, and they snatch their hand back. So consolidation, rejection, and then the least likely, but it happens, is the slice. That's where a 30-minute candle just rips through the zone like it's not even there. Then the high probability thing to happen is for price to then, in this case, pull back up to the zone, confirm that it is in fact going to act as good resistance, and then a continuation in the direction of the slice. Boom, boom, boom. We just travel zone to zone, 98 to 30.10, so that's a 12-point move down. Again, leg, retracement, confirm good resistance, continuation of the move. Now, back to my explanation of the Concierge Trade Alerts. It's a static report, good for the entire session. I like to use the term lines in the sand because I think that translates pretty well. On the long side, we had said last night, if price gets to 30.22, we want to consider going long, come on, yes, I am charting challenged. And right now, I think that just has more than anything to do with volume that's churning through the markets because of the Fed announcement. Okay, so there's the first line in the sand. And I really recommend that everyone, whether you're on the trial, because right now on the trial, if you're on the trial, I'm posting the Concierge Trade Alerts each night. I post them in the CTA channel, as I always do, but additionally, I'm copying them over into the Alert Trial discussion group. So as soon as you get the numbers, you put a line, okay? Concierge Trade Alert said consider being long at or above 3022. Okay, we never touched that number. It also said consider being short at or below 3008, which we did trigger. Okay, I guess some semblance of a straight. Look at that thing go. To all of you that are in this, that bell's for you. Okay. Now, I'm going to try one more time here, get a straight line. That's pretty straight. All right. Okay. So these are your lines in the sand. At this point, you want to get long, or from this point forward, you only want to be looking for long trade setups. Okay. 3008, you want to get short, or from this point forward. Now, of course, you can do whatever you want, but this is for our traders. This is what we teach. You only want to look for short trades. Okay. And this next part's really important. Everything in between is the market making up its mind what it's going to do. Because of the weekly trading zones, this is an instance where we can actually navigate that space between the lines, because this is just so beautifully laid out from a market structure perspective. Zone, the zone, the zone, the zone, the zone. That's 8 points down, 8 points up, 8 points down, 8 points up, 8 points down. Was that 5? 1, 2, 3, 4, 5. Yeah, so 5 times 8 is 40. Now, is it possible to capture all 40 points? No. I mean, yeah, it's possible. You know, anybody can get lucky. But knowing how to navigate in between those is very important, and something that we will, in fact, teach you. Now, look what price is doing. It's continuing to drop. The market got a rate cut. They didn't get what they wanted, though. Everybody thought. Remember yesterday I brought up that one guy that John's not too fond of, Bookvar, who thought Powell's speaking right now. And this is where he sometimes will shoot himself in the foot. The press conference is going on. Okay. So your Concierge Trade Alerts show up via email and in the channel each evening. Once they do, get your lines in the sand on the chart. That takes so much weight off of your shoulders in determining what course of action you're going to take, how you're going to trade. Is the market bullish or bearish? Intraday, intra-session. Should I be going long? Should I be going short? Okay. We clear that up early on. Okay. Again, because of where the weekly trading zones happen to be this week, you're able to even navigate in between the lines in the sand. Typically, though, okay, typically I wait to see which way the market's going to trade for the session. Now, we do on some days, I think we had it on the Russell yesterday, and I pointed it out, we had two-sided action. Triggered on the short side early on, and then later in the session, we also triggered on the long side. Can that happen? Obviously it can, because it did. All right. We've dropped now to 29.88. The next weekly zone below is 29.97/98. Price is always trying to get to a zone. I know you hear me say that a lot, just like I say important prices, important areas are almost always tested. It's so important that you understand this. I think we can all agree where price is headed. Where price is trying to go. Let me phrase that a little better. Where's price trying to go? Well, right where it's going. Now, that's not a zone there. See, 97.98 is this zone. We're approaching the lowest weekly trading zone, and I'm going to put it up on the chart here as soon as I get rid of this 83.84. Now, 83.84, that goes back a couple weeks. That's one that just got left on my chart. 97.98. Let me get this one squared away. Once you understand our methodology, which is simple by design, you're never at a loss as to what you're supposed to do next. Because when you understand our methodology and how our indicators work, it helps you to see clearly what the market is trying to do. And whatever the market is trying to do, that is the next high probability move. So this lowest zone for this week, and let me chart catch up. Okay. Now I'm running an I7 chip. My chart should not be choking up. There's a lot of volume passing through here. And I have broadcasting software. I'm talking to the radio server. So I got a lot going on. That's part of the reason I choke up when maybe you don't, because I have so many applications running at once. But an i7 chip should overcome all of that. Plus I have 32 gigs of RAM. I don't think a lot of people have 32 gigs of RAM, but I intentionally had that put in my machine. I always buy custom built machines. I recommend you do that as well if you know enough about computers to be able to check it out before you pay for it. Because on Craigslist, you're going to meet some of the nicest people in the world. You're going to meet some of the most unique people. And sometimes they're out to get you. But for the most part, read their story, read their narrative. Why are they selling the computer? Maybe they create custom computers as a job. Okay, that's legitimate. Maybe they had a great gaming computer, and for their birthday or whatever other occasion, they came into a newer, super duper gaming computer. A gaming computer has the stuff inside that a trader needs. Okay, so you can go to Craigslist in your town and just search. Once you get into computers for sale, just search gaming computer, or search i7. You really don't want to buy anything with less than an i7 chip in it. Otherwise, if you go with an i5, you're going to probably be buying another computer pretty soon. All right, let me see if I can get this thing moved. Get this going here. All right, 2961. Man, look at that thing go. The swing trades I was going to put on earlier in the week, they sure look good now. Hey, but woulda, coulda, shoulda, right? All right, what's it going to do? Oh, do come on. Crickets. Right. Because I was impatient and clicked it twice. Okay. 2961. We've traded 276,000 contracts so far in the last 30-minute candle. And I seem to be hopelessly locked here. Oh dear. Here it comes. I could shut some things down, I suppose. You know what? I'm not going to aggravate you or myself. I'm just going to cut and run, go to the good word for the day. I'll create a video when things slow down. I'll create a standalone video where I recap the alerts from last night. I will post it in the Telegram channel and the discussion group, and I'll also post it on YouTube. You can always find our work, youtube.com/CFRN. There's years of radio shows there. During the show, it's youtube.com/CFRN, and then you throw a /live onto the end if you want to just stream and watch the live show right off of YouTube. But as far as the repository, the archive, all of that, just youtube.com/CFRN. Okay, so it's finally going to let me do that. Now, not boasting, not bragging, just saying. Price ran down to 59/60. And what did it do? Well, if my chart's anywhere near accurate, so far we got a 13-point bounce. Am I surprised? Is that unusual? No. It's the beauty of the zones, and you know, we have partners that simply trade the zones. They like our strategy and our methodology. They think our indicators are cute, but they just navigate from zone to zone because they understand what I teach. Price is always trying to get to a zone, and through whatever method that you discern which zone price is trying to get to, and that journey is underway, you just got to climb aboard. Wow, what a bounce. We're closing in on what, a 20-point bounce. $50 per point is $1,000 per contract. For the trader who's earned the right to trade 10 contracts, it's a $10,000 bounce so far. Yeah, hey, it closed. Okay. Now, this is the lowest weekly trading zone for this week. Price rarely finishes the week above the highest weekly zone or below the lowest weekly zone. A good way to think about the zones: you're sitting up in the bleachers at a football game, you're looking down onto the field, you got the 50-yard line, and then going to the left, you got the 40, the 30, the 20, right into the end zone, and to the right, same thing. Okay. I like to think of the weekly trading zone as that football field, with the lowest zone being the end zone on one side, the highest zone being the end zone on the other. There are occasions when we'll close outside of the end zone, but it's pretty rare. In fact, since December 14th, 2009, if I take off my shoes, I could probably count up how many times that has happened. 52 weeks in a year times, well, coming up on 10 years. That's a lot of weeks, right? 500. So to say that I don't think it's happened more than 20 times, I don't think I'm stretching it. And if I am, my apologies. Maybe, if I've stretched it, it's not by much. I mean, 25 maybe. But I don't think it's that much. So anyway, it's not something I really track because that in and of itself is not going to enhance your bottom line. So it's just another fun fact to know and tell, I suppose. But look at the bounce. We ripped right through this one. Found support. Now we're trading 20 points higher. Okay. So we've encountered, or we've highlighted two things here. Now if I can get my chart. As things slow down, this will catch up. I got to get my computer guy under the hood. I don't think adding more RAM, 32 gigs, I don't think that's the answer. So maybe I have onboard RAM, onboard memory with each of my video. I have two pretty good video cards. They got their own onboard memory. Maybe I'm running all of my graphics off of just one card. Maybe I'm not harnessing the power of that second card. There's a little clip, it's called a bridge, that I can't seem to figure out where I placed it. When I find it, I'm going to bridge those. I think that might make a difference. So, come on, scroll. What do you know? Finally scrolled, and I scrolled it the wrong way. All right, let's go to the good word for the day. And if this thing sorts itself out, I'll pick back up. Again, if you're on the trial, make sure you ask questions. There's a discussion group for everyone on the trial. Ask away. I wrote a rather lengthy piece the other night that, you know, as a trader, it can be a lonely business. Who can you turn to with questions? Well, you have your broker, but I should caution you, if you're with one of these large firms, like a TD Ameritrade or something, the chance of you ever actually speaking to your broker, I don't even know if that's possible. You'll get an assistant. You'll get somebody who, has some idea. The first question you should ask anybody that you're going to ask questions of, do you trade? Well, what do you mean? Well, it's a simple question. Do you trade? What I'm getting at here is, are the answers I'm about to get to my questions, are they coming out of a manual, a corporate sponsored manual? Or are they coming from your experience as a trader? When you talk to our broker, Bert, 866-928-3310, you're getting answers from someone who trades in the market every day. Yes, he's a broker. He's a lot of things. All good. But he trades. So when you ask a trading question, you're going to get an answer from a trader. I hope the weight of that sinks in. It's so critically important to your success. Now, I'm not saying you got to have Bert for a broker. Obviously, we think he's the best in the business. We think Daniels is the best in the business, or we take our business elsewhere, right? What began as a phone conversation turned into a friendship, which turned into a relationship that's now, I don't know, in its 11th or 12th year. One of our traders way back then kept calling me and saying, hey, I met this broker, and he's really cool, great guy, believer, you should talk to him. Yeah, okay, fine. I get that kind of stuff every day. But this guy would not let up, and I'm so glad he didn't let up. A week would go by, I'd get another message. Did you talk to Bert? No, but I will. About 6 months into this, one day I just said, you know what? I'm going to call him right now. Not because I really wanted to talk to this Bert, whoever he was. I just wanted this guy to quit pestering me. So I put in the call. He answered. First ring. Introduced myself, our common friend, and then we had a conversation. I came away from that conversation just feeling good. I feel good about trading, myself, life. He has that kind of effect on people. And I invited him on the radio show to talk, and one thing turned into another, and now here we are, however many years later, 11, whatever, and they've proven themselves again and again, okay, to just simply be the very best at what they do. Now, Michael and I, we don't get a commission if you open an account with them. If you trade with them, we don't get some, split on the commissions, because that would just muddy the water. If I'm telling you he's the best in the business, they're the best in the business every day, and I'm getting paid to say it, well, that's one thing. But if I'm telling you that, not getting your commissions, not getting a finder's fee if you sign up, if I'm saying it because I really believe it, that's a whole nother thing. And so that's what I'm telling you. There's lots of good brokers out there, and there's a lot of crummy ones, right? There's some that don't trade. There's some, if you ask them certain questions, you immediately pick up on the fact that, well, they just don't know the answer. Okay, well, it doesn't make them a bad person. It just means they don't have the experience. So if you're looking for a broker, if you need a broker, now they're not a discount house. They're a full service broker. Well, what does that mean? It means if you have a problem, when you call, somebody's going to pick up the phone and answer, usually Bert. If you're struggling, he'll come sit with you in the live training room or launch a go-to meeting session with you. He'll walk you through the setups. He knows our methodology inside out. So much so that he teaches a class every Thursday afternoon. Does a webinar. You're invited to participate in that. There's no charge. You hear Michael go through our methodology every morning from 9:30 to 11:30 a.m. in the live training room. Bert does it in kind of slow-mo. He's not actually looking for trade setups. He's not trying to trade as he talks to you on the Thursday afternoon webinars. He's simply walking you through what the setup looks like, how the indicators work, all the things that you need to know. And he does it in a manner that it's easy to follow, easy to understand. He doesn't talk down to people. He doesn't talk over your head. So if Valerie would post the link to this Thursday's class, if there's going to be one, in the chat box, I would appreciate that very much, Valerie. I'm going to try one last time to shrink this thing down. Let's see if I have little or no luck. How about if I just double click? Sometimes that'll center it up. Hey, well, what do you know? All right. So 2 lines in the sand, zone below. Once price takes out this first 30-minute candle low, hey, my chart's updating too. When we take out that low, it's pretty obvious price is trying to get to the zone below. Now, when we rip through this zone, the further we get away from this zone, the higher the probability that we're going to touch this zone. And the same goes here. And that led to support at our lowest weekly trading zone that went out to the partners Monday morning, 6:15 a.m. Eastern. Led us to a 20-point bounce, which actually became a 30-point bounce. We appear to have found some good support. This may very well be low of the session and low of the week. Okay? All right. So the zones layered together with those lines in the sand, the Concierge Trade Alert, really helps you understand. You can see where the market is. This helps you see what it's trying to do. Now, if you also drop the indicators onto this picture, what do we have right before we hit that Concierge Trade Alert number. We had a bearish cross. When we have a bearish cross and price gets below the BBC, the green line, we anticipate lower prices. It's that simple. Remember, what we do may seem elementary, but it's simple by design. Simple by design. Divine, yeah, maybe divine as well, but it's simple by design. A lot of time, treasure, blood, sweat, and tears went into taking something that is very confusing, the markets in general, and filtering it down to something that is understandable, manageable. Don't get me wrong, trading is not easy, but it can be simple. And that's exactly what I'm trying to show you right here, right now, how simple it can be. Because I know how hard it seemed in the beginning. I couldn't even get out of my own way. I think this is something anyone with basic computer skills, basic math skills, the ability to read, I think it's something, you're not going to get it all day one. That's not possible. You won't get it all week one. But after a couple of weeks, because we just repeat the same thing day after day, our indicators don't change. The way we explain them, the way we use them, it's the same across all markets, all time frames. That repetition, all of a sudden, one day, the clouds will part. Michael will go to say something in the live training room, and you hear it in your head before he even speaks it. You know you're on the path. Stay on the path. Once you get on the path, don't start looking at those shiny objects that you pass on the way to Wall Street. Those magical indicators and mystical oscillators. You might go, "Well, this is good. This is real good. Now let me just lay one more filter on this baby, because I'm one mouse click away from greatness. So let me just get one more thing on my screen. I'm telling you now, don't. I'm not knocking anybody else's indicators or oscillators. I'm sure that they do whatever it is they were created to do just fine. But they're not a part of how we see the market and ultimately think about the market. They're not how we create our narrative. So if you drag other things in, I'm not telling you to throw them away, just push them aside for a minute. If you drag other things, if you try to mix it up, when you start having problems or issues, it makes it very, very difficult for me to try to help you, because that other thing, whatever it is, I don't use it. I don't reference it. Again, I'm not knocking it. I'm just saying I don't use it. So you and I need to be on the same page. You, I, and Michael, and Valerie, and Bert. See, we're all on the same page. He uses our methodology and our indicators to trade. The broker. And he'll teach you how to do the same. All right. So we got three things here that help us determine, because price is always trying to get to a zone. You're going to have to just accept that. Till you've seen it enough times that you finally go, oh yeah, well that makes sense. Got to go somewhere, right? So it's trying to get to one or the other. Which one's it trying to get to now? Okay. Which one's it trying to get to now? Green candle, right? We already ran up all the way to what, 29.95-ish, 96. Now, just because it's trying to get somewhere, there's no 100% guarantee it's going to get there. But if it's trying and you understand what it's trying to do, you can participate. You can go along for the ride. Okay? I wouldn't do anything right here, right now. We've got 13 minutes left in the life of this 30-minute candle. I would let this 30-minute candle play out. Because if we close anywhere in this area, price is going to either try to get to 97.98, or it's going to try to get back down to 60.61 to test these lows. Okay. Is there anything else? Zone, Concierge Trade Alert, indicators, stand by. Or as they say, but wait, there's more. Alert number 2382. Consider being short the S&P 3014 to 3012. Trail if possible. Okay. $30.14 is going to be right there. Ish. There we go. Pretty close. All right. Now, 3014 to 3012. Price is below the BBC, so I anticipate lower prices. I also have to anticipate that 3010, 3011 is going to be good support until it isn't. Okay? And then once we cruise below that 3008, I got four things pointing me in the direction where the market's headed, and it just keeps dropping. Now this candle, the swing high here, was 3012.75. Remember this move here was 3014 to 3012. We pop up to 3012.75, okay, and then this. Now, the fact that we had a Fed announcement in the midst of all this, you kind of just push that aside for a minute. As you know, we don't, and I talked about this earlier, we don't trade news as a rule. Okay, I've had my experience. It felt like gambling. I didn't want to be a gambler. I wanted to be a trader. And a lot of people, when they say, well, what do you do for a living? Well, I'm a trader. Oh, you're a gambler. No, I'm a trader. Well, isn't that gambling? You know, for some people it is. Every day's a crapshoot. But when you learn to read a chart, when you learn to understand what the next high probability move is, it's no longer gambling. Every business decision, every new business that opens up, there is risk involved. And the success rate of new businesses is not that great. We already know that 9 out of 10 new traders fail. Futures Magazine published an article many years ago. 9 out of 10 new traders fail. They didn't explain why. They just stated a fact. No one disagreed with it. Everyone just accepted it because they had experienced it. But I, ever inquisitive, I had to get to the bottom of it. 90% failure rate? I mean, not even 90% of Navy SEALs drop out, you know, and ring the bell. I was able to find the common thread. Just play. It's so simple. It was so, once I realized it, it was like, oh, how did I, no teacher. You probably can't fix the plumbing in your house because no one ever taught you how to do plumbing stuff. You probably can't fly an airplane because nobody ever taught you how to fly an airplane. So is it any wonder that 9 out of 10 traders fail if they never had anyone teach them how to trade? Now, buying a set of indicators and a PDF, a companion PDF to go along with them off the internet, that is not the same thing as someone teaching you how to trade. It just isn't. Now, if you can track down the 1 out of 10 who, because if they say 9 out of 10 fail, and it's a fact, well, that means 1 out of 10 is actually succeeding. Track down the 1 out of 10, and 9 times out of 10, If you ask them if they had a teacher, they're going to say, well, yeah. See, to that individual, the thought of learning how to trade without a teacher, it's far removed from reality. You with me? They're like, well, yeah, of course. How else would you learn how to trade? Now, it's not that teachers don't exist. They do. Their price tags are usually very high, and they're usually pretty unapproachable. So we did set out to reinvent the wheel, because we didn't think that wheel rolled very good. We've made teaching, mentoring, coaching approachable, affordable, and available to anyone that has a desire to learn how to trade. If you're looking for gimmicks, if you're looking for parlor tricks, if you're looking for the woo-wee, the ooh-ah, yeah, we're not your company, we're not your group, we're not your family. You know, you can still hang out with us, but you're still on the hunt. And what's going to end up happening is you're going to run out of time or treasure. Hopefully it's treasure, not time. I can't tell you how many times I get into a mentoring session with someone and they start to tell me about all the places they've been and all the money they've spent. And yet they still don't know how to trade. Because the gimmicks and the parlor tricks, sometimes they work for a season, sometimes they don't even work that long, right? Because what we do is based upon the underlying rhythm of the market. Not working isn't an option. As long as the market's open and flowing, what we do flows right along with it. We don't fight it. We don't try to change it. If we can understand where it's going, what its objective is, we just climb aboard. And we teach you how to climb aboard at a point that embraces the smallest amount of risk possible. All the analysis in the world won't get rid of the risk. You have to embrace the risk. That's so important. Let me say it again. All the analysis in the world doesn't eliminate the risk. Our analysis, the way we teach it, does help you to understand what the next high probability move is. And it teaches you how to enter with the least amount of risk. Does that make sense? If it doesn't, put a question in the chat box. I'll be more than happy to answer it. You can also book a mentoring session. I'll ask Valerie to put that link in the chat box as well. Even if you're not a partner. Now, partners and passport holders, they have unlimited access to one-on-one mentoring, coaching, whatever you want to call it, for life. If you've not yet made the decision to join us, you can still book at no charge a mentoring session. I'll spend 45 minutes with you and attempt to answer all of your questions. To those of you that are on the trial right now, as I posted in the channel the other night, I'm willing to answer, Michael and I both are willing to answer any questions that you have, not just about our methodology, our strategy, our indicators, but anything that's trading related. Because I'm sure you've heard lots of things that somebody made sound really important, but you never hear us speak of them. And so maybe you're curious. We do use Fibonacci. Fibonacci is baked into our indicator set. Okay? Things we don't use, stochastics, MACDs, RSIs, I don't knock those. Again, I'm sure that they all, because I've used them all at some point over the, in the past, I'm sure they all do a fine job. Whatever it is they were created to do, I'm sure they do it just fine. It's just that our methodology doesn't utilize those because our primary objective was to help someone, not only become a consistently profitable trader, but we wanted to make the process as simple as possible. I think we've done an okay job at that, but ultimately you'll have to decide. So you can post questions in that alert trial discussion group, or get a hold of Valerie and just book a one-on-one session. Okay? And I'll answer. And if I don't know the answer to something, I'll Google it. No, I'm kidding. If I don't know the answer, if I can't explain it or teach it from my life, from my experiences, I'll pass. And I'll just be honest with you and say, I don't know. What do you mean you don't know? Well, I mean, that's the truth. I don't know. If you have some other questions, maybe I do know. I'll be glad to answer those. We don't claim to be the best, the fastest, or any of that. I do think we're the most transparent. I really do. And I think what we offer you is the simplest you're going to find out there. Now, I know there's that part of our rat brain that says, okay, well, if it's not really, really expensive, it must not be the good stuff. Okay. How many times have I talked to people and they're like, hey, man, is there any way you can split that up into payments? Because I just dropped 20 grand at this one place, and they promised me one-on-one mentoring, and they, since I bought that $20,000 package, I've lost 30 grand. Yeah, okay, well, talk to Valerie about that, so. All right. We are all about the truth about trading. No magic. No magic, no secrets. Just the truth about trading. At the end of the day, that's really all you want to do, right? So you want to be able to get up, put on and take off trades, reach your goal for the day, whatever that is, and go do life. Trading is a means to an end, not an end unto itself. Maybe you want to build orphanages too. Maybe you want to build houses for the homeless. Maybe you want to feed the hungry, clothe the naked, do all the stuff that Jesus told us we should do. Ministry costs money. And that money's got to come from somewhere. The body of Christ for far too long has stood in front of corporate America, hat in hand, shuffling their feet, head bowed, begging. I don't believe God's children should have to beg to do God's work. But again, the money's got to come from somewhere. Let me say this before you get carried away. No matter how pure your intent, no matter how pure your motivation, God cannot, will not move the market to save your bacon. You get in a bad trade, you got to live with it. Quick story, I'm sure most of you heard it before. Two traders walk out of a bar, go back to the office. They got cubicles right next to each other. They both love to trade the S&P 500. Oh, and they both love Jesus. One trader looks at his chart and decides to go long. The other trader looks at his chart, identical chart, decides to go short. A few minutes go by and they're both just praying furiously. Oh, God, help me. Who's God supposed to help? Two believers, both praying. One's long, the other's short. Who's he going to favor? The one who pays the most tithes, the greater percentage of their check? The one who prays the most even when they're not trading? What set of scales and balances does God, he can't, right? Do you understand? If he moves the market for you, he's going to hurt the other, and vice versa. Now, by the power of the Holy Spirit, God can help you learn how to become a trader. He can point you in the direction of somebody that will teach you truth. through the power of the Holy Spirit, he can help you develop self-discipline, self-control. He stands ready at this moment to help you with those things. Don't waste your time or his praying for him to move the market on your behalf, because it's just not going to happen. All right. We've now bounced off this zone at 60.61 all the way up to 97. That's a 36 point or 37 point bounce so far. Okay. Now, a few minutes ago, I said it's pretty obvious where price is trying to go, right? Where'd it go? Right up to the zone overhead. Where do I think it's going to go from here? Well, I'll tell you what's eventually going to happen. May not happen in the next candle or two. See this little green line right here? BBC we call it. Bull bear cross. That's where price is going. By the time you and I talk tomorrow, this will have met that. When this meets that, what's the next high probability move? I can tell you ahead of time. At a leg, a retracement, the high probability thing is a continuation of the move. Now, if you're on the trial, of course, you'll see my thoughts to the tick as I post alerts in the alert channel and as I post commentary in the discussion group. If you're not a part of this, we still got the rest of today. We got Thursday. We got Friday. Go to eminitrainingschool.com and get signed up. No credit card required. You'll see real-time alerts in the moment as they happen. You'll have access to this week's weekly trading zones on all the markets. You'll get the Concierge Trade Alerts when they come out tonight and tomorrow night. I don't issue any on Friday night because there's no trading on Saturday. Sunday night, Globex Open, that starts our new week. So if you're taking part in the trial, maybe you're already on the trial, you're trying to decide, is this right for you? Set up a meeting with me, unless you've already made up your mind. Set up a meeting with me so that I can answer any remaining questions that you have, because I'd like nothing better than to see you ready to go Sunday night at the Globex Open, 6 p.m. Eastern. Next week could be the beginning of a bright new future for you as a trader. Now, if you've really had a rough go at it, you've been beat up pretty hard. I spoke to someone yesterday in a mentoring session briefly who said that comment you made the other day about battered trader syndrome. There was a guy and his girlfriend, it might have been his wife, I'm not sure, but they both want to come aboard and become CFRN traders. They said that really spoke to us because we've been trying for years. And what you say, it's logical. That's why we call it Logic 247. Everything you see us do has a reason. And when you understand the reason, it all becomes very logical. None of this black box stuff, none of this, mystery. We're not men of mystery. We're just traders who are willing to teach you what we know about markets so that you can see it the way we see it, and hopefully the way we approach the market will become how you think. The goal is not that you be dependent upon us forever to get these alerts 24/7. See, in the beginning, an alert is just that, an alert. But as you learn, it becomes confirmation. In other words, when your computer or phone goes dee-dee-dee to let you know there's a new Telegram alert, you look over and it confirms what you already saw. You probably already have the trade on, or getting ready to, or you're marking up your chart. You see that transition? Now the day that my alerts are transmuted into confirmation for you, call me. Call me. We'll dance on our desktops together. We'll pop the cork on a virtual bottle of champagne. Not really a champagne guy, but I'll pop the cork with you anyway. I'm serious, because that's a big day. Big day. Really big day. Okay, lines in the sand, got that. Logic 247 alert. Dynamic in the moment alert. Okay. These were published last night, way back over here, 7:30 Eastern. Never triggered the long side. Triggered the short side. No, the short side. Triggered here. This was the in the moment live real-time alert. Because all of this is new to you, you may not see how those things coming together just paint a crystal clear picture of what the next high probability move is. And when you can discern what the next high probability move is, all aboard. Take the ride with the market. The market's smarter, has deeper pockets, has been at this a lot longer than you and I. So I trust what the market tells me. I trust it to the degree that whatever the market tells me it's doing, all I want to do is the exact same thing. Period. Now, David just posted. ES right back to the zone now. He's absolutely right. We rallied right back up to the zone. Now, it's part of our narrative, the way we understand markets, the way we see and think. What do we expect to happen when price gets to this zone? We expect it to be good resistance until it isn't. Just like we expected this to be good support till it isn't. It was good support, still is. And this zone, now we ran all the way up. We hit a zone. We expected to be good resistance. And so far we've bounced from 97, swing low, 89.75. I don't know, 8 points. What is that, an 8? Is that an 8 point? Yeah. From zone to zone is 13 points. See, it did what we thought it would do, not because we're psychic, because that's the next high probability thing. All right. I've waxed long. Tomorrow, when my charts aren't all herky-jerky, and we've been at this for now 3.5 hours. Wow. And I got a mentoring session coming up. Let's go to the good word for the day, where I started to take you a moment ago. And then I got to get out of here. Tomorrow's Thursday, Dr. Tom Day, also our workshop, our weekly workshop with partners and passport holders tomorrow night. All right. I know sometimes life gets you down. You get a little bit depressed. Well, God's got a remedy for that. He got a remedy for everything. Psalm 43:5. Why, my soul, are you downcast? Why so disturbed within me? Put your hope in God, for I will yet praise him, my Savior, my God. According to the counseling directory, 1 in 10 people are affected by depression at some point in their lives. I think it's far more than that, but with up to 10 times more people suffering from depression now than in 1945. And most of them won't reach out for assistance because they believe depression is weakness. Now let's make an important distinction here. If you're clinically depressed, it could be due to a chemical imbalance in your body. And yes, a doctor can help you. Be careful with those medications, but yes, a doctor can help you. The Bible can help you as well. If you're feeling sad or hopeless, it provides wisdom on how to pull out of it. Your situation won't be solved with a few cliches or a good pick-me-up lecture from a friend. What you need is the wisdom from above. James 3:17. But the wisdom that is from above is first pure, then peaceable, gentle, and easy to be entreated, full of mercy and good fruits, without partiality and without hypocrisy. Kings 19:4. But he himself went a day's journey into the wilderness and came and sat down under a broom tree. And he prayed that he might die, and said, It is enough. Now, Lord, take my life, for I am no better than my fathers. This is Elijah. Elijah sitting down praying that he could just die because life was too painful. But fortunately, he was talking to the person who could help him. In 1 Kings 19:5, all at once, an angel, excuse me, folks, hang on, I'll be right back.
I was going to write it down, Mom.
Again, fortunately, he turned to the right source. All at once, an angel touched him and said, Get up. That's 1 Kings 19:5. Get up. Now, God may not send you an angel that you can see, but he will answer you if you cry out to him. He will answer you. He will lift you up. He will restore you. Remember, he's the one that created you. If you're broken, he can fix you. Now, the psalmist said, Why, my soul, are you downcast? Why so disturbed within me? Put your hope in God, for I will yet praise him, my Savior and my God. Who's David talking to? Himself. Just because you talk to yourself doesn't mean you're crazy. First, he talks to God about his problem. That's what you do in prayer. Next, he listened to God about his problem. That's what you do when you read the scriptures and speak them over your life. This is a strategy that works. It worked for David way back then. It will work for you today. That's our good word for the day. I got to scoot. Thanks so much for tuning in. I had no idea it had gotten so late, but it was a good show. And you helped make it great. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and with his grace. I'll see you at the bell. There'll be no outro sound file today, thanks to Windows upgrade number whatever. Yeah, but I'll put the disclaimer up on the screen for you. Serves the same purpose. Just pretend you hear the pure music. All right? Love you much. See you on the internet.